You have to identify this early, and that's why I think targeting antivirals to vulnerable populations makes a lot of sense.
Yeah.
If you are over 65, if you have a medical condition that predisposes you to severe COVID-19, if you get that positive COVID-19 test, you want to start getting an antiviral right away to change the course of the disease.
That's what Dr. Abramowitz says. Lisa?
Well, honestly, it's interesting to me, the idea here of keeping people out of the hospital. It's got a 50% chance of either keeping people out of the hospital or reducing death. The idea here, Andy, is how much is the fight against COVID a fight to keep people out of a hospital so that you don't have the strain on the healthcare system, and then we can treat this like the common cold?
I think that really is the first and most important goal. We want to protect lives. We want to prevent disease. We don't want to stress the healthcare system, so that we particularly see these ripple effects, right? Where when we have these COVID-19 outbreaks that stress the hospital system, other diseases, people coming in for other types of care suffer because the hospital resources are strained so thin. So you want to keep people out of the hospital. You want to reduce disease severity. And then on top of that, if you can reduce the number of cases and transmission, then you've got extra benefits in terms of controlling the disease.
This whole 50% idea, it's not a sure thing. It's not going to be enough to basically end the pandemic as we know it. What would be? What are you looking for in terms of a treatment, which we have not yet seen, that could potentially be a game changer?
Well, right now, antivirals with 50% efficacy add one more layer to your protection. So if you go out and get the vaccine, if you practice some social distancing when you're in high-risk situations, and you now have an antiviral available, you now have 3 levels of protection, which cumulatively will reduce the number of severe cases in a much higher, in an exponential way than any one of them individually. So that's the first thing that you have to think about. Antivirals are always a little bit difficult because the earlier you treat, the better off you'll be. And with so many asymptomatic infections and with symptoms sometimes progressing very quickly, the timing of the antiviral can often be hard to administer to get a really high efficacy in terms of preventing disease. But it's a tool in the arsenal, and added together with the other things we have can really help us control severe disease.
Dr. Pekos, we see a lot of mask wearing in places where the vaccination rate is 84% or 88%. Indeed, maybe up to 90% as well. In America, is the wearing of masks in high vaccinated areas good science, or is it emotion?
I think it doesn't hurt. I think what's important to know is what your infection rate is in that part of the country. Vaccination rates are great, but it's really about exposure to virus. And if you are in a part of the country where high numbers of cases are occurring, even unvaccinated people, your potential to be exposed to the virus is higher, and therefore having something else in place besides the vaccine to protect you is a good thing to do. Mask wearing in and of itself has to be combined with other things to really be effective.
I look at this, Andy, into the weekend. I see in the United Kingdom they're talking about flu season, about the idea of a flu shot literally being taken at the same time is a booster shot, or I guess a vaccination as well. How does your work on COVID overlay on the flu season?
Well, 2 years ago, my laboratory was completely focused on influenza and dealing with that. And this year, we're gearing up again to start monitoring for influenza, because all signs early in the season indicate that flu is probably going to come back this year. And because we've seen few cases, few infections, we expect to see a burst of flu, particularly in children who have the least amount of immunity to influenza. So we're gearing up to control for that and test for that as well.
Andrew Pekos there, Johns Hopkins University, Bloomberg School of Public Health. Of course, Mr. Bloomberg, with this TV and radio operation on the 40th anniversary of Bloomberg LP.
Yeah, we got that this morning. That's great.
His philanthropy to his Johns Hopkins University as well. Okay, we're gonna dovetail in. I got to be very careful here, folks, on buy, hold, sell. I'm not doing that. I walked by the Apple store in Madison Avenue.
Yep. I
had to go find protection in an espresso store across the street. It was so crowded. Just anecdotal.
Yeah.
But we've got Bloomberg Intelligence today saying the iPhone guesstimate, I'm going to say, is basically underestimated.
Yep.
Anurag and John are coming in 6.5% above the street. They're selling them to beat the band.
Yep.
And then I got Craig Moffat out with 15 pages this week at Moffat Nathanson saying, hello, everybody. It's a cell phone war like 10 years ago where T-Mobile, Verizon, and AT&T are going at it.
Yeah.
I mean, how do you put that together as a securities analyst?
It's interesting. I mean, they're subsidizing again, Tom. They're subsidizing your phone. You don't have to go out and shell out $1,000. I'm getting emails from Apple right now and from Verizon saying, hey, come on in. You can upgrade and on us. So it's
Who pays $1,000 for a phone?
I've never done that, but over the last couple of years, people have been doing it because the phone companies have not. They step back their subsidies.
But you
subsidies.
have a monthly plan. You pay like $50 a month, $70 a month, whatever.
Even those days are now going to be. We're going to go back to where we were before, where the carriers are going to subsidize you to upgrade you because there's so much more services there on these phones. And that's when you talk to the Anurag Ranas of the world and the John Butlers of the world on Apple. They've been banging us over the head about how services is the great long-term growth story for Apple.
Okay. And
when you think about it, you got to get the 13 in your hand. You got to go 5G, Tom. We know that.
What am I going to do? Folks, Paul and I have aged on this question. What does 5G give me?
Faster speeds, better quality data download speeds. So it's all about more data faster.
If I get a text from Mrs. Keene saying, when you're home, walk the damn dogs.
Right.
5G is going to help me.
5G is going to help you download, Titanic, because you're going to want to sit back and watch that again and again and again.
Check.
Used to take you half an hour, now it'll take you, 5 minutes.
The middle child came home when she was 10. The boat sank.
It sank. They found it.
Good morning.
I spend a lot of time in the garage, but even more time in the rain, sleet, and mud. In 95, I helped tow your moving trailer. In 05, I helped you get out of a ditch. Yeah, I know I'm a bit rusty, and sadly in 09, it was sparks from me, your handy chains, dragging behind your truck that accidentally started a wildfire.
Sparks from dragging chains can start a wildfire. Spark a change, not a wildfire. Visit SmokeyBear.com. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Only you can prevent wildfires.
How are financial services firms managing in this new reality? Claire Santaniello, Managing Director at BNY Mellon's Pershing, explains.
If the current times have taught us anything, it's the critical role that technology plays in client relationships. Global conditions have created a business imperative for firms to digitally transform the way they meet client needs and the way they work. Pershing's industry-leading technology enables you to adapt to the evolving ways your clients want to do business, now and in the future, and can help you build an even stronger digital client experience in a simpler, smarter, and safer environment. We have worked with clients of every size to transform their business. Pershing gives you the foundation to stand on, plus our unique perspective, to help you run your business even during the most uncertain of times. We help you consider everything.
To learn more about how Pershing can help you transform your business, visit Pershing.com. Pershing LLC, member FINRA, NYSE, SIPC.
This is a Bloomberg Money Minute. A cyber hack at Neiman Marcus. The online accounts of almost 5 million customers were hit. Dow Jones says that leak included credit card numbers as well as usernames and passwords. It happened in May of 2020, but Neiman Marcus says it just recently learned of the breach. We'll be watching shares of the drug maker Merck today because of the company's COVID-19 antiviral pill that's being touted as a Tamiflu for COVID. It reduced the risk of hospitalization or death by half in the latest analysis of a late-stage trial. Merck plans to ask the FDA for emergency use authorization. People looking for cars have decided to take a break. J.D. Power thinks car sales will see a 13% drop in the last quarter. The reason? A lack of car and truck inventory thanks to the chip shortage. On Wall Street before the opening bell, investors are looking up after a dismal September. S&P futures are adding 15, NASDAQ futures 30, and Dow futures are up 131 points. Joan Doniger, Bloomberg Radio.
When was the moment you discovered that you were meant for the business world?
Have you been getting a lot of inquiries from employers?
And then you started looking for the best sources of information.
Technology is challenging the regulators.
Doctors use kind of a virtual reality look.
I feel like the world is courting Elon Musk.
Which is how you got here.
How are other bankers restricted now?
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. When unprecedented events are unfolding, it's important to let history teach us.
Do you think it's a different world for the Fed?
Bloomberg Balance of Power with David Weston. Weekdays at noon Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
And good morning. I'm Karen Moscow along with Tom Keene and Paul Sweeney. And the opening bell brought to you by SEI with an operating platform designed to support all major asset classes, diverse strategies, and investment vehicles. SEI is redefining wealth management. Learn more at SEIC.com/IMS. Stocks higher at the open. The S&P 500 up 0.5% or 20 points at 4328. The Dow Jones Industrial Average up 0.6% or 213 points at 34,060. And the Nasdaq's up 0.33% or 48 points at 14,495. 10-year Treasury down 2/30 seconds, yield 1.49%. The yield on the 2-year 0.26%. NYMEX crude oil is little change, down 2 cents at $75.01 a barrel. COMEX gold is down 0.1% on $1.20 at $17.55.90 an ounce. The euro 1.1601 against the dollar. The yen's at 111.06. Tom and Paul.
Well, thanks so much. Paul Sweeney and Tom Keene here with a conversation. It's not for those of you that want to scalp Bitcoin out to 45,000 or the latest meme or whatever. But for those of you with serious long-term money, Paul, I'm going to suggest October 1. This is the conversation.
Yep,
for
absolutely.
the fourth quarter. William Booth with us, with Epic, with decades of experience at thinking through what to do when things change. This will be a 2-hour conversation. I'm kidding. Bill Booth, you've got all sorts of definitions of quality growth: profitable, cash generating, inelastic demand, or high margins. How do I discover companies with inelastic demand? Start with what that means.
Basically, it means you have pricing power. You're selling a good or service that people want and need and actually would sacrifice other purchases to be able to buy those goods and services. And so I think some areas that people always talk about are consumer staples and healthcare. I would argue increasingly technology is facing inelastic demand. It's amazing to see how much people are valuing some of these quote-unquote free services online.
So Tuesday, when Afterthought needed a new pair of AirPods, and we discovered it was inelastic demand, and they arrived yesterday at 4:30 p.m., that's an example.
That's a great example. You sound like the kids in my family as well.
All right, Bill. So, we look at this market here. We're starting to see a little bit more volatility. You got the VIX over 22 here, the wall of worry, all that good stuff. Given where we are with earnings, with the economy, with maybe the COVID as well, how are you thinking about equity markets right here?
Yeah, this week's been incredible, and I guess that's what happens when you have all-time high markets, meaning an increasing and ever-growing wall of worry and things to be concerned about. I think one of the things we're focused on, in addition to the quality growth that Tom mentioned, is really looking at companies with high shareholder yield. So these are companies that are returning a lot of cash in the form of buybacks, dividends, and debt pay down. And this is important to us because this is a way of, to use bond market parlance, shortening your duration. And if you're concerned about inflation, if you're concerned about rates, if you're concerned about tapering, shortening your equity duration, I think, is a strategy that you should deploy at least in a portion of your equity portfolio.
All right. So as you think about that, and one of the many conversations that is being had as we speak is inflation. initially the Fed, and it continues to be, the Fed continues to say transitory. But boy, when you look out there, it feels a little bit more than that, and you start to factor in this global supply chain challenges that, again, appear to be a little bit more than transitory. You could make an inflation for longer story out there, can't you?
You certainly can, and we've been on team transitory as well for the better part of this year. But the PCE data that came out this morning raises some questions and concerns. The prices of durable goods are being sustained at very high prices. Rents are worth watching. I think for us, though, this transitory sustainable debate, you really need to look to the five-year forward inflation expectations. They have creeped up from the lows last year, but you're still kind of just north of 2%. If you start to see that number get out of whack, then that's the real issue from us, because once inflation expectations are embedded in the psyche of the consumer, that's when things can really become problematic.
How do you look up the income statement? We're going to have earnings season, and Phil Correa and the rest of them would say you go down to net income and you start there. Modern Turks like you go no. So you look up the income statement, and now you're doing it with this hysteria over margin erosion. So what's your exercise starting October 13th with JP Morgan, up the income statement?
Yeah, we start at the top, and I think you want to see what's happening on the revenue line, because that will be a sign about what type of demand you're facing. How are your customers faring? Are you able to grow despite these increasing uncertainties? And then once you get into sort of costs and gross margins and operating margins, high margins do insulate you from inflationary pressures. It does give companies a cushion. And so we're really going to be paying attention, as you said, to the margins as well. And at the end of the day, for us, what matters is free cash flow. And so to us, we want to see continued good free cash flow generation from our holdings, despite all the volatility and uncertainty that's going on in the world right now.
I can't say enough, Paul, about how he started at the top of the income statement.
That's right. Yes, you got to start there, and it's got to be solid core growth at the top line. Talk to us about what we might see. What are you going to be looking for coming up on this earnings season? Because it seems like a lot of folks are going to really look for some guidance from these management teams about that top line, as Tom was just mentioning, but also about, again, the margins as it relates to supply chains and inflation in the economy. What are you going to be looking for?
I think the guidance is going to be critical, although I think we're going to have to take it with a grain of salt. Certainly, companies can comment what they've seen in the early parts of the fourth quarter, but quite honestly, management teams, I don't think, know any more about the next 12 months than you or I do. There's just so much uncertainty. So guidance will be important. It'll at least provide an anchor for investors to start to think about valuation and where things might be headed. But I think you're going to have to take it with a grain of salt, because there's just too much uncertainty. I don't think visibility is great the longer you look out.
What do the banks do, given the recent interest rate dynamics, spread movement as well? What is your call forward on financials and the big banks?
Certainly, the big banks will benefit from rising rates and steepening of the yield curve and so forth. And then we've had some relaxation around capital distributions, because these are still low growth businesses. So you want to see banks returning capital in the form of dividends and buybacks. Although this is kind of a short-term, long-term conversation, because given what's happened with energy and financials, you're sort of sowing the seeds potentially of your own destruction, in the sense that if rates really do go up, what does that do to consumer confidence? What does that do to consumer discretionary spending? And does what's happening now, if it sustains itself, actually sow the seeds of the next true economic downturn? So you could have too much of a good thing, and that's, I think, a key question for us to focus on.
Bill, I'm starting to see some $100 oil calls out of Wall Street. What do I do on the energy patch?
Well, the interesting thing on the energy patch is that the equities haven't necessarily rallied as strongly as the energy price. And if you kind of look at where these energy stocks were earlier in the year, or even going back a few years, definitely the equities don't reflect the energy price at this point in time, but it's sort of will you know when to get out? Because I think what we're seeing now, we'll see repeatedly over the next decade. We're trying to make this transition from fossil fuels to renewables, and it's not going to be perfectly matched. And we saw this year some of the energy issues really were less than expected hydro generation in China. Wind generally around the world has been below average.
Mm-hmm.
And I think we're going to continue to have these bouts of significant price spikes because it's almost impossible to fit these puzzle pieces together to exactly offset the fossil decline with investment in renewables and alternatives.
Bill Booth, thank you so much. With epic investment this morning here, the first day of the fourth quarter, 2021. With our news in New York City, here's Michael Barr.
Tom Paul, thank you very much. Supreme Court Justice Brett Kavanaugh tested positive for COVID-19 after taking a routine test yesterday. The court said Kavanaugh, who'd learned of the test results last night, has no symptoms and has been fully vaccinated since January. His wife and daughters tested negative. The High Court's term is set to begin on Monday with in-person arguments. There's a potential new weapon in the fight against COVID. Pharmaceutical company Merck released new data today about their antiviral drug, which reduced the risk of hospitalization or death by up to 50% in clinical trials. Merck's CEO Robert Davis called it a game changer.
We couldn't be more excited about the news we're putting out today and the fact that we have really this wonderful new antiviral product. This is the first oral antiviral that will be available to combat COVID-19.
Merck's CEO Robert Davis spoke to ABC. Australia is set to restart international travel in the coming weeks. The country's Prime Minister Scott Morrison says it's time to give Australians their lives back. Morrison says that restrictions will be lifted once the country reaches 80% double-dose vaccination targets.
We've saved lives, we've saved livelihoods, but we must work together to ensure that Australians can reclaim the lives that they once had in this country.
Prime Minister Morrison made the announcement in Canberra today. Despite a long night of negotiations, Democrats remain unable to reach an immediate deal to salvage President Joe Biden's $3.5 trillion government overhaul, forcing leaders to call off promised votes on a related public works bill. Action will resume today. Live from the Bloomberg Interactive Broker Studios, this is Global News, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts, more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom Paul.
The reason they're challenged in Washington is the Washingtons. Do the Redskins have a last name?
No, they do not.
They still don't.
The football team.
The football team. That's it.
How about the Washington Compromises? Or
the do-nothings?
The Washington Negotiators?
Right. That does sound like, that might work, man.
That might.
That might work, yeah.
You know, but are they any good? I mean, have they changed?
They're better than what they were last season.
Well, yeah, they have to be, but, unlike the Lions. But it's the Washingtons, right?
It's
Washington
the football team. It's the football team. You want the nickname. It's the football team.
And then to bring it over here, does everything in Cleveland go on sale with the end of the season?
Yes, they. Speaking of oh my goodness, this is exciting. Okay. For the AL wild card spot, man, it's wild. The Yankees, they're up by 2 games.
Yes, they are.
Over Boston.
And a team from the West Coast.
And a team from the West Coast, yes. Mm-hmm. And Toronto is in the mix also. So you have Seattle, Toronto, and all that's going on.
Not the Guardians.
Yeah, not the Guardians. They're not in there. But the Yankees have to play Tampa Bay, which already clinched their spot.
Right.
In there, I mean, this is going to be
Tampa Bay's not going to sandbag it. They're going to be in there to win.
Is there going to be a 1-game playoff between the Yankees and the Red Sox? Is that how it's likely to play out?
It depends now if the Red Sox get their game together, because I think they're playing the Nationals. We got to see how that's
solid step up for the Orioles.
Yeah, it is. So we're going to see how that plays out. I mean, it'd be nice to see a 1-game play. This is exciting.
What if it's like a 3-way tie? We could have like a wild card before the wild card.
Yeah,
something like that.
This is
good time.
Great.
All right.
It's fun. Do you think games, the World Series should be 5 or 7 games?
7. Don't change.
So?
Do not change that. Keep it 7.
Because of the pitching dynamics.
Yes, you change the whole thing the other way around.
Michael Barr, in the last break, he went and bought $1,000 $11 Tom Brady Patriots ticket for the weekend.
He's all set.
We're up 160 points. Stay with us. This is Bloomberg. Good morning.
This is a Bloomberg.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to the real-time financial news, data, and analytics that can take your workflow to the next level. Power up at Bloomberg.com/professional.
Bloomberg Pursuits look at luxury. Your jet's out of commission. Your Ferrari has a flat. And now you're stressed out about when the Biden tax plan might hit you. Well, it sounds like rich people problems, and that's what it is. It's also proving particularly challenging for high net worth financial advisors, thanks to all the details around the proposed tax package still up in the air. We have to calm them down, said Joan Crane, global wealth strategist at BNY Mellon Wealth Management. We don't know what's going to happen. In the meantime, you can play a game of Spot That Rolls. In 9 years, Rolls-Royce is going all electric. First up, the Spectre sedan, which is scheduled to arrive the end of 2023. It's now undergoing 2.5 million kilometers of testing and offering a veritable Easter egg hunt for lovers of Rolls-Royces, as they will be tested in plain sight on public roads. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business, finance, and the latest news affecting world markets. Powered by more than 2,700 journalists and analysts in over 120 countries. This is Bloomberg Radio. Now, a global news update.
The House is holding off on voting on a massive bipartisan infrastructure bill. Last Thursday night, when he thought a vote would come or what the bill's fate may be, West Virginia Democratic Senator Joe Manchin said it's all up to House Speaker Nancy Pelosi.
I have the utmost respect for her and admiration, and she'll do what she thinks is right. I know that.
Progressive Democrats in the House are threatening to vote down the bipartisan infrastructure bill unless it's tied to the social spending plan. Negotiators are expected to pick up again today. 2 Republican lawmakers are demanding information on a Marine arrested for criticizing the troop withdrawal in Afghanistan. They're giving the defense secretary 1 week to brief a House committee. The officer slammed the military in a viral Facebook video. The father of pop superstar Britney Spears says being removed as conservator is a loss for his daughter. Jamie Spears is speaking out after this week's hearing. He says he loves his daughter unconditionally, but criticized her new lawyer. I'm Michael Kastner.
It's not just work. It's an unfolding, ever-changing universe of characters.
Can we get out of the pandemic?
Bloomberg Business Week.
It's the app that made trading hard to resist.
Weekday afternoons at 2 Eastern on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm Karen Moscow. Stocks pairing gains led by losses in technology companies as traders assess the latest economic data. The S&P 500, little change this morning, heading toward its biggest weekly side since January. Right now, the S&P is at 4308. The Dow Jones Industrial Average up 0.3% or 106 points at 33,950. And the Nasdaq's down 0.2% or 29 points at 14,418. 10-year Treasury up 1/32, yield 1.48%. Yield on the 2-year 0.26%. Well, President Biden has signed a stopgap spending bill to keep the government open till December, but Congress still needs to act on the debt ceiling, or the government could default in as soon as 17 days. Experts think that won't happen, but former Treasury Secretary Larry Sumner says Summers says there's always a chance.
People who play games of chicken never plan to crash their cars and die, but occasionally they do. And that's the risk in this thing. And I hope people will find a way to recognize reality.
And hear more from Larry Summers later today on Bloomberg Wall Street Week at 6 p.m. Eastern on Bloomberg Radio and Television. Also watching shares of Merck real quick, up 8%. After its COVID-19 antiviral pill reduced the risk of hospitalization or death by 50% in an interim analysis of a late-stage trial. That's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. Tom, Keene, and Paul Sweeney. Sigh of relief last night in Washington. No, not the Nationals manager knowing that the pushovers of Boston Red Sox were coming in for a set of games. A sigh of relief from Anne-Marie Horton last night.
Yep.
The government will not shut down. The Panda Cam still operating. For those of you on Bloomberg Radio across the nation, Panda Cam showing some activity in the indoor section of the Smithsonian National Zoo. Not so much on the outdoor. I think a little chilly today for the pandas as well. And, of course, Anne-Marie distracted away from the Panda Cam because she's got an event at 10:30.
We have a caucus coming up at 10:30. Anne-Marie, tell us what they are going to caucus, who's caucusing, and what are they caucusing about?
It's the Democrats in the House. They're going to be the ones that are meeting this morning. This comes after yesterday. There was supposed to be a vote. Speaker Pelosi left at midnight saying there'll be a vote today. Now it's Friday. She promised one Monday. She promised one yesterday. There is a little bit of a funny moment here because she didn't actually gavel out. So technically in the legislative calendar, it is still September. It is still Thursday yesterday, but we all know it's Friday. And they're going to work out whether or not they could bring this bipartisan infrastructure bill to the floor if they have the votes for it, if there's been any sort of negotiations between the moderates and the progressives to get the progressives to sign up for it.
So, I mean, I guess my question is, for you and the others that are in the Beltway, really have your finger on the pulse here, how disappointing was it not to get the infrastructure bill yesterday?
It was disappointing for the moderates. They said that they were going to be drinking champagne yesterday evening, that they would have this vote. Also disappointing for the president in the sense that there is a stall of his agenda in Congress. And E.J. Dionne from the Washington Post was writing about this yesterday. You leave milk out too long, it curdles. He says what they risk in making an error is the 10 months they spent, the Democrats, back when President Obama was in office, about bickering about Obamacare. And then it actually hurt them in the midterms. And that was his point. So they do want to move quickly.
Anne-Marie, I'm really ignorant about this. It goes back to 1796 in Great Britain and, you know, arguing about sailors. But the caucus gets together, and Speaker Pelosi doesn't run the meeting. Hakeem Jeffries of New York and Pete Aguilar of California are caucus chairman and caucus vice chair. Mm-hmm. Okay, fine. Do they meet is it like a smoke-filled room?
No, I don't think there's any smoking, at least none I can see, thank gosh, from inside the Capitol and the buildings today. Listen, they're probably going to have a very frank conversation. And even though Pelosi's not running the caucus meeting, she is running the show. I mean, even during the congressional baseball game this week, you saw her in the dugout on the phone. If she's not meeting with someone physically, she is on the phone. The speaker is masterful of this. Her own colleagues have said it, even if they don't agree with her, about whipping the vote. The question is, can she get it done today? If not, does it bleed into the weekend? You know, are they going to be stuck to stay here? Next week, the House is supposed to be back home and visiting their constituents. Potentially, they're going to be back here Monday morning.
So is this have to be voted on today simply because if you don't get this done, you can't really move forward on the bigger spending taxation plan?
This bill does not have to be voted on today. It is, in a sense, an arbitrary date that they had decided on. But I will say something that Speaker Pelosi did do. She decided on this date because also what is in this bill is transportation for the highways, funding for that. And that has now lapsed as of midnight last night, which means 2,500 workers are going to be furloughed. So unless they have another bill to make sure that the highways are up and running and workers are not being furloughed, they have to pass that hard infrastructure bill. So they tactically put that in the hard infrastructure bill to make sure they can push it forward.
Anne-Marie, two things here. And you know, I did my research, as you know I do. And Speaker Pelosi at the baseball game wasn't on the phone work in the political lines. She was on the phone to the Giants, really suggesting that Michael Yastrzemski, the grandson of St. Carl, really needed to step up against Luke Weaver and the Diamondbacks and, do the sacrifice fly as he did. That's really what was going on when she was helping with pitch selection from Mike Yastrzemski. The Yankees, Anne-Marie, that's the only reason you're on today. We don't really care about Washington. Paul is betting, I don't know, he's like bet 2 years of tuition or something on this game. I mean, Yankees Rays, what do you think?
Oh, well, I'm a Yankees fan, so I have to go full on with anything I can, good vibes towards them, and I hope they take this into
See how she's
the
on
end.
top
They
of
have
that?
top wild card spot. I know your poor Red Sox, Tom. I mean, losing to the Orioles, aren't the Orioles the worst ranked team in terms of wins? And the cameraman here with me is shaking his head. He's at the game. And
See, this is you move to Washington.
Yep.
You enter the Beltway, and only Horton has a cameraman on radio.
Oh, that's right. Exactly. On call.
Anne-Marie, thank you so much. Be sure the makeup for radio is better next time. Anne-Marie Horton with us, our Chief Washington correspondent, with a cameraman.
Yep.
On 99.1. Do you think Nathan Hager has a cameraman?
I don't think Nathan Hager has a cameraman. We stick him in the radio studio, and he's just there all day, every day.
She's down there. I mean, she's working like a 20-hour day.
Yeah. I mean, she thought, coming from London, going to Washington, the White House, the glamour, all that kind of... No, she's just up all day, all night.
I was halfway through like the surveillance sleep last night, knowing they were up all night. She's in the bottom of the Hay Adams Hotel counting votes.
That's right. Exactly.
It's amazing how she did that. Well, here we are, first day of October. What do you think, Paul? Go to cash?
Yeah, everybody says, there's that wall of worry out there, but is that buy the dip folks? Are they still out there? Are they going to support this market here going into the fourth quarter? Boy, you talk to the Doug Casses of the world, and there's a lot of things to be concerned about. But then the question becomes, all right, if you're not in the equity markets, where do you go?
It's not just Doug Cass trading. The longer term, Mike Wilson at Morgan Stanley's cautious.
Yep. Yep.
I looked for an entry point. I couldn't find it in the third quarter.
You're probably going to get one at some point.
Please stay with us on Bitcoin in the next hour. Kaylee Lyons wound up on Bitcoin.
As a research university, NJIT makes smart technologies even smarter. That's why NJIT graduate and civil engineer Anya O'Dwyer says the university is so important for her industry.
Construction and civil engineering is always going to have cranes and, people and movement, but how we're designing and implementing things, that's what's changing. We have millions of data points now that we never had before, and that's allowed us to think about planning and design in a way that we haven't done so before. NJIT is very much at the forefront of that. Collecting data, understanding data, manipulating data, having access to a facility like NJIT, which is constantly focused on research and innovation, is so important for the industry and what it means to be designing for smarter systems.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Wake up and text. Text and eat. Text and catch the bus. Text and miss your stop. Wait. Text and be late to work. Sorry, I'm late. Text and work. Text and pretend to work. Text and act surprised when someone calls you out for not working.
Who, me?
Text and meet up with a friend you haven't seen in forever.
Hi. Oh, hey.
Text and complain that they're on their phone the whole time. Text and listen to them complain that you're on your phone the whole time. Text and whatever. But when you get behind the wheel, give your phone to a passenger. Put it in the glove box. Just don't text and drive. Visit StopTextsStopWrecks.org. A public service announcement brought to you by the National Highway Traffic Safety Administration and the Ad Council.
This is a Bloomberg Money Minute. The company formerly known as PricewaterhouseCoopers, PwC, is fine with workers who want to keep working from home. The company is introducing a work anywhere policy. PwC says that's to help keep and attract talent. It's also mandating staff be fully vaccinated against COVID to visit any offices or clients as of November 1st. Vaccine mandates are becoming more common. A research consultant from Gartner says 1 in 4 companies has issued vaccine orders for workers since President Biden told large companies to do so or require testing. Another 13% of companies do plan a mandate. Hope for a pill that could treat COVID is sending Merck shares up more than 10%. The company says analysis of some late-stage trial results find Merck's antiviral pill cut the risk of hospitalization and death by half. Wall Street right now looking mixed. The Dow up 173, the Nasdaq falling 15, the S&P gaining 8. Joan Doniger, Bloomberg Radio.
The market news you need.
Rates are low, earnings are pretty good.
Along with the insights you didn't know you needed.
When I'm walking my dog, when I'm taking Steve around the block.
Steve is the name of your dog?
Yeah, Steve.
Bloomberg Markets with Paul Sweeney and Matt Miller.
My dream scenario is that Paul sells his house, then the bubble bursts, and then I can find one.
Weekday mornings at 10 Eastern.
Never met Steve?
I have not met Steve.
Been on TV a lot.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Broadcasting 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
How do you kind of view the volatility in the marketplace here?
Everyone's focused on the vaccine rollout.
Companies across industries really trying to shore up their balance sheets.
These equity indexes just keep going up.
Breaking market news and insight from Bloomberg experts.
The strong dollar policy, I think, is a lot of its rhetoric. Because of all the dislocations, there's always relative value trades that you could be doing.
The only issue is how hot can home prices go?
It's the uncertainty, I think, that is really spooking everyone.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Kaylee Lyons once again sitting in for Matt Miller today. Coming up, we're going to chat with Abhay Deshpande, Chief Investment Officer for Centerstone Investors on these markets. Plus, Phil Orlando, one of the more bullish portfolio managers and strategists that we talk to. He's been consistently bullish, consistently right. Is he still there given the wall of worry that is growing here? But first, let's go to Greg Jarrett and get a Bloomberg Business Flash. Greg.
Why, thank you. We're sponsored by New Jersey Institute of Technology, transforming computing professionals into data scientists to meet demand in the fast-growing field. Learn more at njit.edu/data science. Tech companies have been weighing on the broader equity markets as traders assess the latest economic readings. Sarah Hunt, portfolio manager, Alpine Woods Capital Investors, tells Bloomberg she, for one, is positive on tech.
If you look at some of the larger technology stocks that were hurt a little bit in the original reopening trade, I think that there's still room for that group to do fairly well, and that is a group that has more pricing power than some of the other areas. We also look at things like, United Pacific and Dollar General, things on the economy that are that the softer reopening that we got are going to benefit through the next year as well.
Let's check the markets. The S&P's up 0.2%, up 8. The Dow's now up 0.6%, up 205. And the Nasdaq's down 0.3%, down 40. The 10-year is down 4/32. The yield 1.50%. West Texas Intermediate crude's up 0.4% at 75.32 a barrel, with COMEX gold down 0.1% at 17.5490 an ounce. The dollar yen 111.12, the euro $1.1597, and the British pound $1.3562. Bitcoin jumped, rising in a matter of minutes to its biggest daily gain since July. And other digital currencies surged in a shock rally that followed the largest monthly decline since May. The largest cryptocurrency gained as much as 10%, now up 8.4%. That's a Bloomberg Business Flash. I'm Greg Jarrett. Now, Bloomberg Markets is on with Paul Sweeney. And I'm assuming Kaylee Lyons made a heck of a killing on Bitcoin with all the jewelry that she's wearing.
I
Those
wish.
Manolos that she got.
Oh, Greg.
Matt Miller made a killing, but he just can't monetize his killing because he forgot the code for his Bitcoin.
Yep, forgot his password.
So it's somewhere written down somewhere. All right, Market Drivers today is brought to you by Witham. More than CPAs, they are trusted advisors offering smart business solutions to help companies grow, innovate, grow, and stay secure in today's complex world. Visit Witham. Bloomberg.com for more. So kind of a mixed day here for the first day of the fourth quarter trading. Bloomberg Markets reporter Kriti Gupta is with us. Kriti, what are you looking at?
You know, it's interesting because we're kind of at this turn of the month, but it's still the same story broadly. I mean, we're coming off of a negative month in September. If you actually crunch the numbers, which we did on the Markets Live team, I'm gonna nerd out here, Paul and Haley. Bear with me here. But, you know, we crunched the numbers. We said, if it's a bad September, does that mean it's going to be a bad October? And the answer is almost always yes. At least if you go into the last 5 years approximately, where you have this major kind of seasonality sell-off in September. But there is this concept of the October effect, which the members of my team who predate me, we'll just say, put it that way, really said that it's October that's the selling month because going back to 1907, 1929, that's when bank runs used to happen almost exclusively in October, which is kind of weird. Black Wednesday in the 1980s. Really interesting to see if that trend still continues, and it actually does, to where people say, well, it's not either or month, we're just going to sell in both months. So the trend has really been, if you have a big sell-off in September, you still sell off in October, but by less of a margin, and it goes the other way around too. If you have a positive September, you tend to have a positive October, but by less of the margin that you did in September. So today's bounce is really going to be, I mean, let's go back to intraday here, right? You don't want to hear about 1907, but today's bounce is really just going to be related to what you saw in the last 4 sessions, which is a lot of selling pressure. So there will be a bit of buy the dip. But remember, we're headed into the weekend. It's a Friday. People might cash out into the close.
Yeah, and we can talk about October all we want, but then there's also the question of November and December. And there is a massive gap between, you know, the most bullish out there. I know we're going to talk to Phil Orlando, who's super bullish later on this hour, versus the most bearish. I mean, the targets on the S&P 500 range from 3,800 to north of 4,800. How is there no consensus out there right now?
Well, we've been asking that for like a year and a half, right? It's because we just don't know what to expect in the markets, whether it's COVID cases, whether it's supply chains. I mean, I think a lot of people thought those supply chain issues wouldn't get worse. They would get better, or something would be figured out, alternative supply chains. And then you start to see this commodity sell-off. The European energy crisis isn't helping. And that one's actually pretty interesting because you are starting to see a global impact from it. You're seeing it show up in crude prices. You're seeing it show up in just purchasing power. And I imagine you'll end up seeing it show up in kind of the economic data as well when it comes to purchasing power there, but also how that reflects on risk sentiment here in the States. That's going to be crucial as well if the Fed talks about it. So to answer your question, Kaylee, no, I don't know why the forecasts are this big. But you know what? I sympathize with those guys because I don't know how you can even say what can happen in November, December. We're still in the era where everything's kind of an unknown.
And I think that's why this earnings season, as they usually are, is going to be really important for this market simply from a guidance perspective, because that global supply chain uncertainty, the energy issues in Europe, and inflation just broadly throughout the economy. It looks like the COVID data is trending positively. That's the good news. But again, there's a lot of issues out there. It's going to be interesting to see how far out companies go with their guidance when they start reporting in a couple of weeks.
And we were warned about these supply issues, right? Like 6 months ago, we heard some of these major companies of corporate America and around the world saying we're going to have these issues, but we didn't necessarily see it priced in the stock yet. It was one of those kind of broad things in the background. Now you're seeing it actively hitting companies like Nike, FedEx. I mean, you can name them. There are a lot of them happening here where you start to say, well, okay, hold on a second. This is going to actively affect the bottom line in this quarter, and now we can quantify it. We know just how much of a sales we're going to lose. I think Kaylee reported this on TV a while back. It was like a statistic that Tara LaChapelle, if I'm saying her name right, in her opinion, said 40 days to move a Nike pair of Nike shoes across the world, and now it's 80 days.
I mean, this is like serious. This is when we're talking about the Christmas holiday shopping season looking entirely different.
What are we going to do without our sneakers?
That's a valid question, you know? I do have to just take a pause here from the markets because Paul Kriti is going to take a little vacation next week, and then when she comes back, she will be officially joining the television and radio team here. So we will benefit from her insight every single day.
Every day.
Here, which we are so lucky to have her. So Kriti, I'm going to throw a curveball at you now. It's a little test. Bitcoin. Why is it up 9%?
This is my welcome gift? Come on,
Kaylee. Jeez. We're testing you.
You know, it's really interesting because there's no reason. We were scratching our heads about this, but it is a 2 standard deviation move. So this is a pretty significant move in Bitcoin, but I wish I had an answer. I really
Tom Keene in the market.
I'm copying this. I'm going to cop out on this one.
I'll tell you, the good news today, the good news story today is Merck having that therapeutic pill, you know, that can really be a big breakthrough in treating folks who have COVID, and the stock's up the most since, I guess, 2012. It's just extraordinary. It's up about 9% today.
Yeah, and Bailey Lipschultz, who's our stocks reporter who covers all things healthcare, reported on this, and he said a lot of analysts are calling this the game changer, and here's why. It's not just that it's reducing the hospitalization or death risk by 50%, so that's pretty huge in itself, but it's effective against all variants that have been, found in the world so far, including Delta. So that is the game changer, because you do have a lot of antiviral drugs that work on certain strains, but not all of them. So pretty interesting for Merck.
Yeah, that's great. It's great news. And it just goes back to, you think about over these last 18 months, just the extraordinary performance of the good folks in these pharmaceutical and biotech companies. At the beginning of this, we were talking years for some type of vaccine, and they came through in 12 months, and now they're coming through with, all these therapeutics. It's just extraordinary. I hope people will look at these pharmaceutical companies maybe in a little bit different light than they historically have. We're all concerned about the price of drugs, and it's a big issue for everybody when you get around the, the Thanksgiving table. But boy, they came through this time.
Yeah, they really did. And the question, too, is they came through on the vaccines, but you can't necessarily get everyone to take them. That is why we are in the surge that we're in. But if you have treatment then that can mitigate those surges, even if people aren't vaccinated, that could go a long way in helping us, finally be able to get out of this pandemic.
Yeah, it's just extraordinary. Bloomberg Markets reporter Kriti Gupta, thank you so much. We appreciate that. We'll be chatting a little bit later as well. Again, the markets here kind of mixed. We have the Dow up 177, but NASDAQ, it's down about 0.4%. All right now let's head down to our 99.1 studios in Washington, D.C. Let's get world and national news with Amy Morris.
All right, thank you, Paul. The Supreme Court says Justice Brett Kavanaugh has tested positive for COVID-19. The High Court says Kavanaugh has no symptoms. He's been fully vaccinated since January. Kavanaugh and all the other justices had routine coronavirus tests ahead of today's ceremonial investiture for Justice Amy Coney Barrett. Now, the court says Kavanaugh's wife and daughters are also fully vaccinated, and they've tested negative. A potential new weapon in the fight against COVID. Pharmaceutical company Merck has released new data today about their new antiviral drug, which has reduced the risk of hospitalization or death by up to 50% in clinical trials. Merck CEO Robert Davis tells ABC News this is a game changer.
This is a pill. You can take it home, and it will significantly reduce the risk that you either ultimately are hospitalized or, more importantly, that you would ever face the unfortunate outcome of death.
Now, you would take that pill twice a day for 5 days if you get sick. It would help your body fight off the virus. It was a long night of negotiations, but Democrats were not able to reach a deal to salvage President Biden's $3.5 trillion economic plan. Democrats are set to meet less than half an hour from now to try to continue working on that deal. And with just hours to spare, the president signed a bill to avoid a government shutdown and keep federal agencies funded through December 3rd. The stopgap measure does not include anything about the debt ceiling, though. Treasury Secretary Janet Yellen says failure to raise or suspend the debt limit by mid-October will lead to a financial crisis and economic recession. We're, of course, still following that. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
Carol Massar.
The world's financial decision makers connect on the Bloomberg terminal, sharing ideas, negotiating trades, and forming an influential network that helps power global markets. Isn't it time you join them? Bloomberg.com/professional.
And Bloomberg Quick Takes Tim Stenivek. They keep such a careful eye on business trends and developments. You'd guess there are more than two of them. Nope, they're just that good.
What do you still want to see from the CDC?
Bloomberg Business Week.
They cross different parts of our investment world.
Is that an actual competitor for wireline broadband?
Weekday afternoons at 2 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Adopt US Kids presents What to Expect When You're Expecting a Teenager. Learning the lingo.
Jelly. Jelly adjective. Jelly is a shorter, better way to say jealous. As in, Chloe, I am like so jelly of your unicorn phone case.
You don't have to speak teen to be a perfect parent. Thousands of teens in foster care will love you just the same. Visit adoptuskids.org. Brought to you by the U.S. Department of Health and Human Services, Adopt US Kids, and the Ad Council.
Introducing Bloomberg Quick Take. Our global stories take on tomorrow today.
Watch live news on the events changing your business and your world. And go deeper with original shows on business, technology, politics, and culture. Don't settle for a news network built for yesterday. For a global view and an informed take, Bloomberg Quick Take. Now streaming free on Bloomberg.com/QuickTake. Brought to you by Accenture, American Express, and AT&T Business.
To protect her home and family in a disaster, Karen was willing to wade through water, mud, and insurance paperwork.
Yeah, I can do this.
You go, Karen! By simply understanding and updating what her insurance covers and doesn't cover now, she'll be better prepared no matter when disaster strikes. Learn other simple ways to protect your home and family before a natural disaster at ready.gov. That's ready.gov. A message from FEMA and the Ad Council.
Where are today's real testing grounds for the latest innovation? Places where advancements in health, transportation, and business happen every day. Cities. Today, cities lead the way, taking local solves and turning them into global solutions. Now, introducing Bloomberg City Lab, a new platform covering the present and future of global cities. Learn more at Bloomberg.com/CityLab. Brought to you in partnership with Hyundai.
When Paul Sweeney and Matt Miller bring you the day's market news.
How do you think investors should view Bitcoin?
You can count on some frivolity.
We've never taken them to Disney, so just failure on so many different fronts.
Bloomberg Markets. Extensive, essential, and endlessly entertaining.
I'm not a pet person. I'm a financial analyst.
By the way, someone writes in and says, I didn't realize Paul hated American values.
Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
My mother was always very active and independent, and she was familiar with her neighborhood. But one day, she stopped at the stop sign for much longer than usual. She wasn't even really sure where she was at.
It's important for you to talk to someone about it. I felt so much better after my son told me, Mom, we'll figure it out.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/our stories to learn more. A message from the Alzheimer's Association and the Ad Council.
Burden LLP Accountants and Advisors presents Tax Chat with Richard Goldstein, Senior Principal and Co-Leader of Burden State and Local Tax Practice.
COVID-19 pandemic state and local government restrictions have caused many people to shelter in place outside their primary state of residence. The new normal of remote working has proliferated potentially costly state and local tax residency issues. For example, if you live in Manhattan but have been residing and working in Connecticut because of the pandemic, you may be a resident of one or both states and potentially taxed twice on the same income. At Burden, we help clients develop a plan to address double residency concerns and non-resident income allocation to minimize their overall tax liability. If you're a high net worth individual or a business owner, let Burden help protect you, your family, and your business.
For more Tax Chat from Burden Accountants and Advisors, visit burdenllp.com. That's BERDONLLP.com. Burden Accountants and Advisors. We listen, we solve, we do.
We used to take our freedom of movement for granted. Not anymore.
It's not just the people who work for the airlines.
And it's natural to feel grateful for the things that kept you going.
Does America have a chance to lose our advantage?
Can we get to herd immunity fast enough so that we'll be in good shape?
But really, we were just doing our jobs.
Oxford University is starting a study on patients who've recovered from COVID.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Accounting professional Liam Cohen, CPA, a trustee of the Jewish Communal Fund, and Sephardic Beaker Holem, talks about why he uses JCF's donor-advised fund and recommends JCF to his clients.
JCF is an organization that I've worked with for many years, both personally and in my accounting practice. The ease of giving and managing my donations through their website is very effective. Using it for tax planning and managing all of my charitable giving through one place. JCF's endowment helps support Jewish organizations throughout the tri-state area, and that's very important to me and my clients.
JCF's donor-advised fund is the smarter way to give back. Let Jewish Communal Fund maximize your clients' charitable deductions and streamline their charitable giving, since JCF handles all the administration. Get started now at jcfny.org or call 212-752-8277. We have a gift for giving.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Stocks have been fluctuating down right now. The tech-heavy NASDAQ dropped for a fifth straight session, while the S&P continues to fluctuate. The benchmark gauge headed toward its biggest weekly slide since January. Companies which stand to benefit the most from a pickup in growth outperformed today. The U.S. dollar's down. Bitcoin is on a tear. Let's look at the numbers. The S&P is down 0.25%, down 10. The Dow's up 0.1%, up 26, and the NASDAQ's down 0.7%, down 100. The 10-year is up 1/32. The yield 1.48%. West Texas Intermediate crude is up about 0.1%, now it's $75.10 per barrel. COMEX gold is up 0.1% at $17.5930 an ounce. The dollar yen 110 even. The euro $1.1593. The British pound $1.3553. And Bitcoin is currently up 8.7% at 47,197. That is a Bloomberg. Oh, wait a minute. Tesla is expected to report record deliveries of roughly 224,000 vehicles, the most recent quarter. Another milestone for the CEO. Tesla right now is down 1.3%. That is a Bloomberg Business Flash. Bloomberg Markets continues now. Kaylee Lyons and Paul Sweeney.
I guess Elon Musk doesn't have microchip supply issues like some of the others. We'll see how that number comes out. All right. So, Kaylee, this is day one of the fourth quarter. A lot of folks are saying, I got to sprint to the dash here to put up some numbers. Abhay Deshpande joins us. He's founder and chief investment officer of Centerstone Investors on the phone from New York City. So, Abhay, if I'm a PM, I'm sitting here October 1. I got 3 months left to the year. Maybe I'm a little bit behind my index. What do I do today?
Well, it's a good question. I mean, there's so many cross currents. I mean, at Centerstone Investors, we're running the marathon, not the sprint. So, we're kind of taking a longer view of things. But, for those people who are focused on more of the short term, there's plenty of crosswinds. I mean, the main thing I think that people are struggling with is, are we about to do this again? The economy's, running hot. So there was some inflation. So the forward-looking numbers are that the economy is going to slow down. We can't absorb the inflation, so it's slowing down. But the Federal Reserve, are they looking in the rearview mirror or not? In the past, this is basically every single cycle, right? You have the inflation numbers go up, and then the Fed kind of panics a little bit, raises rates, but by then the economy is already slowing down. They turn something that should be routine into something more, they create the Frankenstein that ruins the village. So it's a lot to process if you're focused on the short term, that's for sure.
Okay, but as you say, Abhay, you're focused on the long term. So if you're running a marathon, what are your biggest hurdles? Is it, the pulling back of fiscal and monetary support? Is it these kind of supply side issues? Is it just valuations more broadly? What makes you nervous?
It continues to be the unpredictable, sort of the unknowns, right? And the main sort of driver of these unknowns is that policymakers feel the need to be, constantly involved. If they just do nothing, I think the economies would recover. In some ways, the unpredictable part of it is what are they going to do next, right? Another couple of trillion, or shut down the entire world economy, and things are recovering. So if we look at things from a longer term perspective. I mentioned at Centerstone, and from a longer term perspective, from a value investor's perch, there's plenty of value and plenty of reason to be optimistic. Provided that you can sort of assume that there's going to be interference in the market economies for some time, but the economies seem to be strong enough to withstand it.
All right. So, with a longer term perspective, Abhay, are you guys at Centerstone? Are you more thinking I'm sticking with the long term top line growth stories, tech, healthcare, things like that, or are you playing maybe a little bit longer reopening trade from a global perspective?
Yeah, I'd say if you had to bucket us, it's definitely not in technology. I think that area of the market is very expensive, but maybe justifiably so. It's not really what we do; it's not our expertise. But for us, the last 18 months allowed many businesses around the world that were in more industrial and cyclical areas to address some glaring cost inefficiencies. Something that would have taken years it took a few months. They were able to just cut massive amounts of costs. Frankfurt Airport, for instance, reduced their expense structure by 300 million euros, something they would never have been able to do without the kind of the cover of, quote unquote cover of this past 18 months. So what we're looking at is a whole host of companies that have reduced their cost structures and that have massive amounts of operating leverage. So as there is a recovery, whether it's 6 months from now or a year from now, the operating leverage means that the earnings growth potential is just tremendous. And the stock prices do not reflect that. So that's kind of where, we find a lot of opportunity, but it does require patience. As I said, there's so much interference by sort of the authorities that it's, pushes the time frame a little bit further beyond where.
Yeah. So let's talk about some of those authorities, the fiscal authorities. Who knows what's going to happen with the infrastructure and social spending package down on Capitol Hill, what it will ultimately look like, what the pay-fors will involve in terms of higher taxes. How are you operating with that uncertainty of what corporate tax rates are going to look like going forward into the future and how that affects some of the companies you'd want to invest in?
Well, we're U.S. investors only partly. We are global investors. The majority of our exposure is global, and we don't have these tax issues, like this kind of nonsense going around in most of the countries we're investing. So it only really affects our U.S. names, and in particular those U.S. names that are only U.S. focused. So the tax cuts that they had put in place a few years ago really benefited local U.S. companies. So ironically, this will affect domestic companies that predominantly are domestically oriented in the United States. But it's not going from 20 to 40%. I mean, it's going from 20 to maybe 25 or 26. We'll see it exactly as you mentioned, Katie. We don't know yet, but that's kind of the scale of it. I don't think that's enough to really destroy, a business. On the margin, it will impact what they do with their, excess cash flow or free cash flows.
Right.
But I don't see a major effect because of that.
All right, Abhay, thank you so much for joining us. Abhay Deshpande, founder and Chief Investment Officer of Centerstone Investors, staying long this market here. And it's going to be interesting to see, Kaylee, when we have earnings coming out, A, what the numbers are, of course, but B, what the guidance is and what kind of confidence some of these C-suite folks have in issuing guidance for their business.
Yeah, especially considering these supply chain issues. I think there was an expectation for most of this year that they were going to ease up in the fall, in the months ahead. Now that is a much larger question mark. And how do you give any kind of firm guidance when there's still so many constraints out there on the supply side?
Yeah, absolutely. But on the flip side, I think analysts and investors are going to be really demanding of some guidance here as we 18 months into this pandemic. This is Bloomberg.
This is a Bloomberg.
The world's financial decision makers connect on the Bloomberg terminal. The buy side and the sell side together, collaborating across markets and countries in real time, sharing ideas, negotiating trades, and forming an influential network of over 325,000 financial professionals that helps power global markets. Isn't it time you join them? Request a demo at Bloomberg.com/professional.
Bloomberg Money Minutes. Another company is throwing in the towel when it comes to bringing employees back to the office. PwC, formerly PricewaterhouseCoopers, is introducing a work anywhere policy for its 55,000 U.S. employees, allowing them to choose an all-virtual work option in a bid to keep and attract workers. But the firm also will require staff to be fully vaccinated against COVID-19 to visit any of its offices or visit clients as of November 1st. Google is firing back at a monopoly lawsuit by 17 states, calling the case deeply flawed and telling a judge that the complaint about its display advertising business fails to state any antitrust claim. The company said the coalition led by Texas already has amended its complaint multiple times, making it longer but not stronger. Wall Street's kicking off the new month and 2021's fourth quarter with a recently common motif, split indexes. Right now, the Dow is gaining 0.5%, NASDAQ losing almost 0.5%, S&P 500 up 0.1%. I'm Andrew O'Day, Bloomberg Radio.
It's time for today's STEM tip. Okay, you know recycling is important. No one wants plastic in the ocean. Here's a cool way to repurpose a plastic bottle. Build an awesome terrarium. Cut a large plastic bottle in half and fill the base with sand, pebbles, potting soil, and your favorite plant. I chose an African violet. put the top of the bottle over your base and place it in the sun. Your plant will grow sealed in its own ecosystem. Fun, right? Learn more at She Can STEM. A message from the Ad Council.
Economics.
Chairman Powell looks brilliant.
Finance.
Some breaking news for you. A share sale.
Investment.
The narrative of the reopening trade has changed.
The Bloomberg Surveillance Podcast.
Do you want some volatility, Tom? Please. Do you want me to go there?
Tom Keene, Jonathan Farrow, Lisa Abramowitz, and the names that shape the world's markets.
Joseph Stiglitz of Columbia University, the laureate.
Bloomberg Surveillance. Listen today at Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts. Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
Not completing high school is more of a social thing than it was an academic thing. Even though all these years have passed, I still had that longing to have my diploma.
At age 30, Carissa finished her high school diploma.
If you're even considering getting your high school diploma, you can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, shares how we help you consider everything.
In today's ever-evolving environment, the team at Pershing's Prime Services wants to know, what are you focused on now? Are you confident in the stability of your counterparty? Do you feel they can help you grow your business? When it comes to fundraising, do you have access to the mindset of the advisor or have what you need to navigate the ODD process? Exceptional service for our clients is at the core of what we do. Our award-winning team is just one of the benefits of working with BNY Mellon. Whether it's customized financing or securities lending solutions, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your demands, so you can focus on growing your business and producing results for your clients.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC, member FINRA, NYSE, SIPC.
What is dedication?
The thing that drives me every day as a dad is Dariana. We call him Day for short. Every day he's hungry for something, whether it's attention, affection, knowledge. And there's this huge responsibility in making sure that when he's no longer under my wing, that he's a good person. I think the advice I would give is you don't need to know all the answers. The craziest thing was believing that your dad knew everything. So as a dad, you felt like you had to know everything. You had to get everything right. It's okay to make mistakes. As long as it's coming from love, then, it kind of starts to work itself out. I want him to be able to sit back one day and go, we worked together, we did a good job.
That's dedication. Find out more at fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council. What is dedication?
The thing that drives me every day as a dad is Dariana. We call him Day for short. Every day he's hungry for something, whether it's attention, affection, knowledge. And there's this huge responsibility in making sure that when he's no longer under my wing, that he's a good person. I want him to be able to sit back one day and go, we worked together, we did a good job.
That's dedication. Find out more at fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council.
When unprecedented events are unfolding, it's important to let history teach us.
Do you think it's a different world for the Fed?
Bloomberg Balance of Power with David Weston. Weekdays at noon Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
All right, coming up, we're going to have more on what is going on in Washington, D.C. We're going to have more on that ISM factory order. We're going to have some more details there. Plus, we're going to chat with Phil Orlando. He's the Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
Well, Paul, we're looking at tech companies that are being dragged down by the broader equity markets. Traders are assessing data showing faster than estimated inflation against prospects for an economic rebound. Meanwhile, President Biden has signed a stopgap spending bill to keep the government open until December. But Congress still needs to act on the debt ceiling, and the government could default in as soon as 17 days. Now, experts think that's not going to happen, but former Treasury Secretary Larry Summers says, watch out, there's always a chance.
People who play games of chicken never plan to crash their cars and die, but occasionally they do. And that's the risk in this thing. And I hope people will find a way to recognize reality.
You can hear more from Summers later today on Bloomberg Wall Street Week at 6 p.m. Eastern on Bloomberg Radio and Television. Let's look at the markets. The S&P's down 0.3%, down 14. The Dow's a little changed up 7, and the NASDAQ is down 0.8%, down 112. The 10-year's up 230 seconds. The yield 1.48%. West Texas Intermediate crude is a little changed at 74.98 a barrel. COMEX gold is up 0.3% at 1763.30 an ounce. The dollar yen 110.94. The euro $1.15.95, and the British pound $1.35.61. That's a Bloomberg Business Flash. Bloomberg Markets continues now with Kaylee and Paul.
All right, Greg Jarrett, thank you so much. We appreciate it. Today is October 1st. We have 3 quarters of 2021 in the books. As we start the 4th quarter, let's check in on Phil Orlando, Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes. Phil, thanks so much for joining us here. You've had a consistent, constructive view of this equity market. Where are you now as we start Q4?
Well, Paul, as we talked about, I guess going back into the August period, the stock market was at record highs. We were up 20% beginning of the year, up 107% since the pandemic trough in March. But we felt that there were a significant number of Washington-related headwinds on the horizon during August, September, and October, and we felt that the market was poised for a 5 to 10% pullback during that period. So we reduced our equity allocation a little bit, raised some cash, went a little more defensive. With the benefit of hindsight, the market is down about 5.5% or so over the last month. We think there could be another shoe to drop here, given the state of play in Washington right now. So I think we're just sort of sitting tight and watching how events evolve in Congress and at the Federal Reserve over the course of the next couple days and couple of weeks.
So what would your reentry point be where you start to deploy a little bit of that cash and put it back to work in the equity market?
Sure. A great question, Kaylee. I think there are two. From a price standpoint, what we were looking for, technically speaking, was a pullback to the 200-day moving average. So in round numbers, the 200-day moving average is a little above the 4,100 level. From a fundamental standpoint, we want to get a sense that issues have been resolved or we're making progress towards that resolution. Now, I think we've got our hands on the Federal Reserve. Inflation is sustainable. And I think the Fed is now coming to that realization. They're going to announce the tapering, we think, on November 3rd, complete the tapering by the middle of the next year, and then rate increases start at the end of next year. We don't have any problem with what the Fed's doing. But when we look at fiscal policy, we've got this continuing resolution that passed yesterday to keep the government running. But this debt ceiling issue is still, very much an open question. We're very comfortable with the $1.2 trillion bipartisan infrastructure bill, even though Speaker Pelosi has moved the vote dates out a couple of times. The big enchilada right now is how do we resolve this $5.5 trillion human infrastructure bill? We've got to see that number smaller, tighter, better targeted, less debt, less tax increases, and that right now is a very open question. And frankly, that's what's going on, with Speaker Pelosi and her members right now.
How concerned are you about this inflation that we're seeing throughout the economy, again, feels less and less transitory, maybe a little bit more longer term. How do you guys think about that?
Well, this is, you're preaching to the choir here. This has been our talking point for the last 6 months. We thought the Federal Reserve had completely misread the sustainability of the inflation issues. Their argument was that once the procedural base effects, rolled off in May, then inflation would sort of tame down. And in our view, there was no comprehension of what the impact was on shelter, food inflation, wages, energy. Those prices were sustainable, they were sticky, and they were going to continue to force the core CPI much higher than the Fed target. We just got an update this morning. August level for the last 3 months now has been 3.6% core PCE. The Fed's target's 2%, and it's now August, not May. So at this point, I think the Fed is throwing in the towel, and that's why the last two set of dot plots in June and September show slower economic growth, higher inflation. The fact that the Fed is acknowledging that, and they're going to start to taper next month and start to tighten policy in terms of liftoff from ZIRP by the end of next year. I think that's exactly what they need to do. And so, frankly, we're comfortable that the Fed is going to make the right set of decisions. But there's one caveat in there. There's a potential leadership transition issue that is looming. President Biden needs to indicate over the course of the next couple of weeks, the next month or so, what he plans to do with Chair Powell's renomination and three other potentially open seats on the board. That is an issue that the market, we don't have answers to, and I think we need to have some sense of where President Biden wants to go with that.
Yeah, it's going to be a tough decision for the president, considering progressives like Elizabeth Warren have made their feelings quite clear this week. Warren saying to Powell's face she does not want him reappointed for a second term. But then you have the moderates that Biden's going to need for any kind of confirmation, Paul, who would like Powell to stay. Yeah, absolutely. And the markets don't like uncertainty. Hey, Phil, thanks so much for joining us. Once again, we always appreciate your time. Phil Orlando, Chief Equity Market Strategist and head of the Client Portfolio Management team at Federated Hermes. They got some money under management, about $100 billion in equity, $645 billion in total. So they know what they're talking about. And Phil mentioned he's historically been pretty bullish. They pulled back recently a little bit, got a little bit more conservative on these equity markets when they were pushing all-time highs. They've pulled back a little bit, but Phil thinks it could maybe even pull back a little bit more to give them an opportunity to put some of that capital to work. So they're a little bit cautious here and otherwise a constructive outlook. Right now, let's head down to Washington, D.C. for World and National News with Amy Mars. Amy.
All right, thank you, Paul. New details now for you about vaccination guidance for federal employees. Workers will have to prove they're vaccinated by November 8th or face suspension and possible termination. The Office of Personnel Management Guidance encourages agencies to collect vaccine cards from workers. And anyone who hasn't gotten their final vaccine dose by November 9th should be given a 5-day grace period before they're suspended without pay. Workers who don't get their shot after that will be fired. Any new hires are also to be fully vaccinated. There are signs that business travelers are getting back into the air now that COVID vaccines are available and cases are slowing. Dave Harvey with Southwest Airlines says they're starting to see an uptick.
In March, we really started seeing about a 5-point increase month over month, so some nice momentum.
Southwest Airlines' Dave Harvey says there's been debate over whether big businesses should stick with Zoom calls, which became common during COVID. This week, Southwest is selling Fortune 200 companies on the benefits of face-to-face meetings, especially in sales. House Democratic leaders still trying to push that big infrastructure bill over the finish line. House progressives are threatening to vote no without a corresponding vote on a much larger social spending bill. Moderates like West Virginia Senator Joe Manchin want a smaller bill. Democratic Congressman Andy Levin of Michigan says Manchin simply has too much power in these negotiations.
Joe Manchin represents about 40% as many people as are in southeast Michigan. And the idea that he should, by himself, determine this, no, let's get together and negotiate.
Democrats are meeting at this hour to continue those talks. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Asset manager. If knowledge is power, The Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the terminal can take your workflow to the next level at Bloomberg.com/professional.
Who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically. Yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Greg Sauter is president of WGI, which provides engineering solutions for public infrastructure and real estate development projects. He's also on the board of overseers for New Jersey Institute of Technology and sees firsthand the intense demand by companies to hire NJIT graduates.
It's become almost cliche to say, but a large percentage of the jobs required in the not too distant future have not even been identified yet. What that means is we need graduates with problem-solving skills and an understanding of technology, technological dexterity to be the leaders and innovators of the future. NJIT is rising to that challenge. It's not just about the engineering and the science, but it's also about the application of those in problem-solving. Understanding how to apply is something that NJIT is outstanding at, and that's one of the reasons that their student body, that their graduates are sought after.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
There are a lot of ways to look at the world right now.
Interesting that you've got an overweight on Hong Kong.
And the more of them you can access, the better.
What has to be his strategy?
Perspective.
Who's doing school best?
Clarity.
How do we get it so that the benefits get to everybody?
Expertise.
He seems to have exactly the right combination. It's character plus policy.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg. The world is listening.
Burden LLP Accountants and Advisors presents Tax Chat with Mayor Mintz, partner and co-leader of Burden's real estate practice.
Whether it's because of the COVID-19 pandemic or not, it is essential for anyone negotiating a deal to understand the underlying economic assumptions and the current market. From buying or selling assets to forming a joint venture, it's important to work with a sophisticated tax advisor who understands how the changing tax law may impact the structure of the deal. At Burden, we leverage our more than 100 years of transactional experience to help guide clients through the complexities of these structures and ensure that they understand any potential tax impact. If you're a high net worth individual or business owner, let Burden help protect you, your family, and your business.
For more Tax Chat from Burden, visit BurdenLLP.com. That's BERDONLLP.com. Burden Accountants and Advisors. We listen, we solve, we do.
These are the sounds of a dinner that almost didn't happen. A dinner now served, thanks to people like you. Due to COVID-19, 17 million more Americans may face hunger. Feeding America is helping our neighbors in need. And if you're able, you can too. Donations are being accepted at feedingamerica.org/coronavirus. Brought to you by the Ad Council and Feeding America, 200 food banks strong.
Hey, Dad, your prescription will be ready in just a minute. Hey, Dad, your laundry will be ready in just a minute. Dad, your lunch will be ready in just a minute.
Hey, honey, why don't you take a minute? When you help care for a loved one, you give them as much time as you can, making sure they're safe and comfortable. But it's just as important that you take some time for yourself. At AARP, we can help with information and useful tips on how you can maintain a healthy life balance, care for your own physical and mental well-being, and manage the challenges of caring for a loved one. Because the better care you take of yourself, the better care you can provide for your loved one.
Thanks, Dad.
Thank you. You're there for them. We're here for you. Find free care guides to support you and your loved one at aarp.org/caregiving. That's aarp.org/caregiving. A public service announcement brought to you by AARP and the Ad Council.
For the Jewish Communal Fund, Barbara Novick, investment professional and philanthropist.
I think JCF has one of the best funds out there. It's very reasonable in its pricing, it's very flexible in its investments, and I give them an A+ for client service.
A fund may be opened with a $5,000 contribution of cash or appreciated securities and can be used as an alternative to a private foundation. At any time, you may suggest which charities you would like to support and in what amounts. Choose from the menu of high-rated investment options, and your charitable fund can earn tax-free income.
It's a very client-centric organization. They have a very user-friendly website, and I find they make my life easier.
Let the Jewish Communal Fund be your personal connection to charitable giving. Open a JCF fund now to lock in this year's tax deduction. Call 212-752-8277, 212-752-8277, or visit jcfny.org.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Well, if you're waiting for a dip alert, here's a dip alert. We're taking one now. The tech-heavy NASDAQ is down for the fifth straight day. Energy and financial firms seem to be outperforming today. The benchmark gauge of U.S. equities has headed toward its biggest weekly slide since October of 2020. Vaccine makers dragged down healthcare companies after Merck and company's COVID-19 antiviral pill reduced the risk of hospitalization or death by 50% in an interim analysis of a late-stage trial. The S&P's down 0.4% now, down 16. The Dow's down 0.1%, down 42. And the NASDAQ's down 0.8%, down 112. The 10-year is up 4/32. The yield 1.47%. West Texas Intermediate crude's down 0.5% at 74.69 a barrel. COMEX gold is up 0.2% at 17.6020 an ounce. The dollar yen 110.96. The euro $1.1588. The pound $1.3542. A measure of U.S. manufacturing expanded for September at the fastest pace in 4 months, bolstered by robust demand for factory goods and burgeoning inventory. The Institute for Supply Management's gauge of factory activity rose to 61.1 from 59.9 in August. Readings above 50 indicate expansion. That's a Bloomberg Business Flash. Bloomberg Markets continue now. Paul Sweeney and Kaylee Lyons.
All right, Greg, Jared, thanks so much. We appreciate it. Well, I guess when we take a look at what's going on down in Washington, D.C., I guess we could say the good news is that Congress did avoid a shutdown, but the bad news is it failed to even vote on the infrastructure bill. We're not even talking about the bigger spending bill. So let's kind of figure out where we are here, get a reset. We do that with Josh Wingrove, White House correspondent for Bloomberg News, joins us on the phone from D.C. So, Josh, where are we, I guess, first on the infrastructure bill? Will we get a vote today?
It's up in the air right now. Democrats are meeting as we speak. You know, this bill is sort of being held hostage, if you will, by the other bill. And so the rose-colored glasses view of the White House and other advocates is that they are closer than ever to a deal. They made progress because of this deadline, which the White House has called sort of a false deadline yesterday. And so there's at least some expressed hope that there could be a vote today. But the less, rose-colored view is, there were pledges of a vote yesterday. It obviously did not happen. And if one bill drags down the other, they both could go down. And that is obviously a rebuke for Joe Biden, who is counting on both these measures to be taken together as his sort of economic package. So, where does that leave us? Right now, the White House really seems focused on convincing those moderate senators to take something on the reconciliation package so that the House Democrats, the Progressive Caucus, will allow that infrastructure deal to go through.
Well, speaking of the Progressive Caucus, we just got some headlines crossing the terminal from Representative Jayapal, who, of course, is the leader within that caucus, saying that they've been waiting for an offer to counter $3.5 trillion, that they don't expect a resolution out of the meeting they had this morning. But she also conceded that the top line number may have to go down. Of course, Joe Manchin has put it out there, the senator, the moderate from West Virginia. He wants $1.5 trillion. Have we heard anything at all from Sinema?
Sinema has said that she has provided a number directly to the White House, but she has declined to provide that number publicly. And so depending on who you ask, Joe Manchin is kind of the barrier or Kristen Sinema is the barrier. And, I think Manchin has been a little more public, a little more at the center stage of this, but, both of them obviously have to come on board. So remember, this $3.5 trillion is over 10 years. I don't know that we say that enough, right? So there's ways to bring down that top line number by, you can either reduce the spending over the period, or you could reduce the period, or you could do both. And so, I think there's a lot of moving parts on this one, but progressives have done pretty well, frankly, to sort of hold the line. There was sort of predictions yesterday they would blink and let this go through. That really hasn't happened. And so Joe Biden is, in a pickle right now. And so we'll see if they can get something together. I will note that both moderates and progressives say that Biden and his staff are pretty involved right now. So, this is both a sign of, the work they're putting into it, but also, it's putting his reputation on the line. Remember, Biden not only sort of casts himself as like a closer that can get these things done, but he also believes in a bipartisan Washington that a lot of people in this city don't really think exists anymore. And getting that infrastructure bill in particular through was sort of a litmus test of whether that kind of Washington still exists or can still exist.
In hindsight, was it a mistake in strategy to tie the infrastructure bill with the broader spending bill?
I think it depends on who you want to blame for it. Certainly, some of the feedback today, or the pundit class, has been that moderates erred, in doing that. They essentially handed the power to the progressives to hold the bill, the infrastructure bill, up while they, sought whatever concessions they wanted. So, but at the same time, I don't know that there was necessarily another way, or at least I think the White House might argue that there was necessarily another way to go. I mean, bottom line, what we're talking about here is an infrastructure package that is $550 billion in new money. That's a big figure, but people are incentivized to overstate it. They're saying $1 billion, but that includes existing money. And $3.5 trillion over 10 years, which again, people are, whether they like it or don't like it, they're incentivized to overstate it and forget to say it's over 10 years. So these are sort of sizable things, but they're being sort of juiced up both by their advocates and their opponents. And so it can be a little difficult, you can imagine, for anyone, in particular the average American, trying to keep following it, to follow the bouncing ball on this.
Yeah, well, let's talk about the average American. How is this going to impact voters, especially as, 2022 midterms aren't all that far away at this point? What impact does this have on that really crucial time period for the Democrats?
I mean, there's some elections going on right now, for instance, the governor's race in Virginia. And there's been sort of Democrats warning that could have an impact on that. But yeah, Democrats believe that they have to get stuff done if they have any hope of holding the House in particular in 2022. But, some of the stuff in Biden's proposal, whether you like it or not, everyone agrees it's impactful. They just don't. Some like the impact and some don't like the impact. Higher taxes on corporations, potentially a minimum tax on corporations, higher taxes on high earners, child tax benefits, climate measures, many healthcare measures. There's a lot of stuff in here that real people would notice in their real lives, and that is not always the case in Washington, D.C. So, I guess they'll see whether or not they get a deal. But, at the end of the day, Joe Manchin said yesterday, he's like, I've never claimed to be a liberal. So I don't know, God love the liberals in our party, but I've never claimed to be one. This is just the reality of having such razor-thin majorities in both chambers. If Democrats had managed to pull another Senate seat or two, then they would have had a lot more breathing room here. But instead, this is where they are.
What's any timing deadlines we should be aware of? It. Yesterday to me seemed like a pretty hard deadline until it wasn't. Are there any deadlines that we should be aware of?
Well, as we all know, there's a few moving parts here. They did get a CR to avoid a government shutdown, but they didn't extend the Surface Transportation Act, so that's going to ripple through. That CR only punted to December. We'll be back at this dance in a few months. Of course, the debt ceiling question is looming. That is very much up in the air. Bloomberg's Joe Weisenthal certainly has been, exploring the mint the coin angle of that, shall we say? And then, there's these other bills. So all of these are moving, but frankly, there is no particular deadline for the infrastructure bill or the reconciliation bill. It can slide, but the fear is that if it slides, then the momentum that they claim to have had the last couple of days will stall. And so right now, that is sort of the sense of urgency on this. But yesterday, there were people, sort of moderates pledging. One said, quote, 1,000%. We'll have a vote yesterday, and of course that did not pan out. There seem to be fewer predictions happening now.
All right, Josh, thanks so much for joining us. We always appreciate getting the update from you. You've got your finger on the pulse down there in Washington. Josh Wingrove, White House correspondent for Bloomberg News, on the phone from Washington, D.C. Again, Congress did avoid the shutdown, but did not get the vote on infrastructure. So they continue to discuss and negotiate today. The Democrats are caucusing right now as we speak, and hopefully they can get some movement going there. We're going to obviously have complete coverage throughout the day. This is Bloomberg.
It's not just 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Lower for longer. We hear that from Fed Chairman Jay Powell.
One of the best ways to watch inflation is with the break-evens.
Let's get a chance to see what's really going on under the hood.
The economy has changed.
Breaking market news and insight from Bloomberg experts.
You can't have a narrow slice of the country doing well and everybody else doing poorly.
Are we looking at a more damaging break in the labor market?
We're looking at late 2021, early 2022, where it really feels quote-unquote normal.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Lots of eco data out this morning. We're going to take a look at the manufacturing data. It came out pretty strong. Manufacturing has been very solid through this pandemic. We're going to break down that number. It is Friday, so that means we talk municipal bonds. And with taxes going up, it is more poignant than ever. We're going to do that today with Joe Mysak. He's editor of Bloomberg Brief. We'll get the latest on the municipal bond market. But first, let's go to Greg Jarrett, Bloomberg News, and get a Bloomberg Business Flash. Greg.
Almost lost it when you said Thursday, Paul. I was so much looking forward to my golf round this afternoon. Well, we've been fluctuating for a lot of the morning, but I think we've spent the vast majority of the morning in the red, and it's tech companies that have been weighing heavily on the broader equity market. Traders are looking at data also showing faster than estimated inflation against prospects for an economic rebound. Jane Foley, head of FX strategy at Rabobank, tells Bloomberg there's also a lot of pressure on sterling.
The fuel price shortages, driver shortages, skills shortages, and the whole suite of these concerns is weighing, it appears, on investment expectations. We've seen that in the survey this morning from the UK's Institute of Directors. And that is really bogging down sterling right now.
Let's look at the numbers here. The S&P is little changed, up 2. The Dow is up 0.3%, up 120. And the NASDAQ is down 0.3%, down 47. The 10-year is up 2/30 seconds. The yield 1.48%. West Texas Intermediate crude oil is now down 0.4% at 74.76 a barrel, with COMEX gold up 0.1% at 17.5870 an ounce. The dollar yen 110.98. The euro $1.15.95. The British pound $1.35.39. European gas surged to a record 100 euros as China stepped up a global fight for energy supplies in a move that threatens to derail the economic recovery. Prices did retreat after a while. In volatile trading, benchmark futures gained as much as 2.3% today before retreating. And according to sources, China ordered its state-owned energy companies to secure supplies for this winter at all costs. That's a Bloomberg Business Flash. Bloomberg Markets continues now. Paul Sweeney and Kaylee Lyons.
All right, Greg Jarrett, thank you so much. Enjoy that round of golf. It is still on today. It is Friday. All right, we got some volatility in the equity markets today, kind of things all over, red and green. Let's take a look at the world of small cap stocks. We do that with Bloomberg Markets reporter Kriti Gupta. Kriti, what are you looking at?
Oh, there you go.
The Russell 2000 broadly up 0.2%. So not a huge rally, but not too shabby either. A little bit of volatility there. Under the hood, though, AMC catching a little bit of a bid. So those retail traders perhaps back a little bit. But I think all the action is really happening in the Merck read-through, because you do have Merck coming out with their COVID-19 antiviral pill, cutting the risk of death. It's huge.
Yep.
Game changer is what the analysts are calling it, cutting death or hospitalization by 50%. And on top of that, they are perhaps, actually, I should say, they have said that it works against all the variants, including Delta. So crucial. But here's the read-through. You have a lot of those competitors, essentially, that have been working on those antibody treatments for COVID. Things like Vir Biotechnology, ticker VIR, slumping about 22%. It was slumping more earlier. It looks like they paired some of those gains. Adagio Therapeutics is another one. ADGI down 40%. But to the upside, a similar story where you have Atea Pharmaceutical soaring about 33%. Now up about 20%. This is a company that does a lot with oral antivirals for treating COVID in particular. And the reason this is good news for them, despite some of the others Merck competitors doing poorly, is that it could be a good sign for their own candidate, AT-527. So really validating some of their own research as well. That, of course, is all subject to the FDA. The other one I want to very quickly highlight is SunPower, ticker SPWR, shares up 10% as it replaces SimRx Energy in the S&P 500, S&P Midcap 400 before the market opens on October 5th.
All right, Critty Group, the Bloomberg Markets reporter, thank you so much. We appreciate that. All right, we had a ton of eco data out this morning, and one of the bigger numbers was the ISM manufacturing came in better than expected. Let's break it down with Tim Fury, chairman of the Manufacturing Business Survey for the Institute for Supply Management based in Miami, Florida. So, Tim, good number, good gain from last month. What's your take on the ISM manufacturing?
Yeah, thanks, Paul. So another strong month of demand. Demand was, really positive in all areas. New orders were good. New export orders were up. Customer inventory is still way too low. Backlog still near record highs. So demand just continues to beat expectations. The production side saw very slight growth, about a half a point if you combine production as well as employment. The issue there remains labor headcount at the panelist companies, as well as their suppliers. So the big story again for the month is this is a supply-restricted growth environment. We actually reversed some softening on the supply delivery side, and we also saw prices kind of go up again too. So.
Yeah, demand has never been the problem. And on some of those kind of supply side constraints, I see the average lead time for materials rose to 92 days in September. That's the highest going back to 1987. Is that going to improve anytime soon? What's your sense?
Well, I mean, that's driving a lot of other activity, too. So, some of the things that it's probably doing is probably having an impact on the new order levels, because the price is continuing to go up. You're going to try to capture the price today, especially if you're not so confident what's going to happen 3 months from now. A couple of months from now, there was a belief that, okay, prices are going to soften a little bit, so hold back on your orders until you see it happening. But I think with this reversal here on the prices side, people are jumping back in and placing orders at extended lead times. I mean, I'm hearing stories of 52 weeks on semiconductors.
Wow.
6 months on steel, and who really knows what's going to happen 1 year from now? So that's the risk to the manufacturing environment, is that if things start to soften and you have all these extended orders out there at higher prices, what's going to happen? But none of that's going to happen in the short term here. I think everybody's really positive that things are going to continue as we close the year. Q1 is going to be a strong period. Q2 most likely too. The question still remains on half two, but I don't think anybody sees it falling off the cliff of that.
So, Tim, it's interesting, the labor issue. We hear that in so many different industries, but it's one thing finding it difficult to find people to come in and wait tables and flip burgers. But I'm thinking these manufacturing jobs are highly paid, good benefits, some unionization. I'm kind of surprised that, manufacturing America is having a labor problem.
Yeah, it's a mix. I mean, it's a mix. There's definitely a cadre of direct labor who have long tenure with the company, a lot of knowledge, highly skilled. They're most likely not going to jump for a 5% increase down the street, and that's probably not the issue. But there is quite a bit of low to moderate level skill level labor. We had 85% of our comments were higher comments again for the month of September. 47% of those indicated that they were having difficulty which is up 12 points from August, which was a bit of a surprise. 21% of those companies claimed, of all the companies claimed, high levels of turnover being a significant challenge. And that's people jumping for wage increases down the street, as well as what's becoming clear is a lot more retirements than we normally see.
And finally, just quickly, we know that there's an energy crisis ongoing in many parts of the world. China factories are getting hit by it, and Europe as well. Is there any sign of that becoming problematic here in the U.S.?
Well, here we go, right? Petroleum products and natural gas feed into pretty much everything. You can't make steel without energy. Probably 25-30% of the cost of steel is energy. Cement, I mean, plastics is all natural gas. We haven't seen crude this high in a long time. I think it's like $80 for West Texas Intermediate. Mm-hmm. What concerns me more is natural gas is $5.50 to $6. That starts to eliminate our competitive advantage around the world. Part of that is being driven now by the fact that we don't have enough wells injecting, and we're also exporting quite a bit of LNG to Southeast Asia where the price is 3x. So not very good. I think longer term, we got to fix that because that's what makes America really competitive. It's very competitive energy prices.
Hey, Tim, thanks so much for joining us. I always love a conversation that includes cement and steel and all that good stuff, good manufacturing talk for Friday. Timothy Fiore, chairman of the Manufacturing Business Survey at the Institute for Supply Management. They're based in Miami. And, boy, we've had some good manufacturing data pretty much all throughout the pandemic. Kind of middle America has been cranking it through. So some good data there. All right, right now, let's head down to our 99.1 studios in Washington, D.C. We'll get world and national news with Amy Mars.
All right, thank you, Paul. Democrats are meeting as we speak. They're trying to hammer out an agreement over President Biden's $3.5 trillion economic plan. Moderate Democrats say that package is too much. It's $3.5 trillion over 10 years. They say it's too big. Progressives say they're waiting for a counteroffer, and they don't expect a deal out of this morning's meeting. Now, everyone does seem to agree on the infrastructure bill, but progressives say they won't support that until they pass the larger economic plan. So that remains in limbo. A Trump-era health policy used to immediately deport most illegal immigrants could end soon. Texas Republican Senator John Cornyn says that would be a mistake.
The Border Patrol told me if they lost Title 42 as a tool to expel migrants coming across the border, they would lose control of the border.
Now, this comes as the head of Homeland Security is out with a memo that details a shift in immigration policy. It reads that just because someone is in the country illegally doesn't mean there should be automatically an enforcement action to kick them out. The focus is now on detaining and deporting immigrants who pose a threat to national security or who have committed a crime. The Supreme Court says Justice Brett Kavanaugh has tested positive for COVID-19. The High Court says Kavanaugh has no symptoms and has been fully vaccinated since January. Kavanaugh and all the other justices had routine coronavirus tests ahead of today's ceremonial investiture for Justice Amy Coney Barrett. The court says Kavanaugh's wife and daughters are also fully vaccinated, and they have all tested negative. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the Terminal can take your workflow to the next level at Bloomberg.com/professional.
The expression hit the ground running. We think it's a better idea to hit the ground listening. Karen Moscow.
The pandemic is having a major impact on the labor market.
Nathan Hager.
President Biden is setting a new goal.
Bloomberg Daybreak.
A landmark trial kicked off this week.
Weekday mornings at 5 Eastern.
We really haven't seen that kind of move happen.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
A Shiro's work is never done. You care for the house, the kids, and our future. We're so grateful for all you do. Now, it's time to care for yourself and save a little more for retirement. A free 3-minute online chat can give you the personalized tips you need to boost your retirement savings now. Visit aceyourretirement.org today.
A public service announcement brought to you by AARP and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
Know that feeling? Like every door is closing and you just can't see a way out? Being unemployed, underemployed, or just out of school can feel like that. But when you find the right tools, suddenly everything just clicks. FindSomethingNew.org offers resources that help develop new skills. Skills that can position you for careers in today's growing industries, from healthcare and manufacturing to cybersecurity and alternative energy. Find your path to a new career at FindSomethingNew.org. A message from the Ad Council.
What's the difference between you and your competition?
What's your vision in this relationship?
We're guessing one thing is that you are better informed.
European Central Bank President Christine Lagarde had this to say.
Actually, we're not guessing.
The realism of this is tangible.
Up-to-the-moment news.
Some of the biggest states could see most of the money.
Expert analysis.
Does that mean you're focusing on banks and other financials?
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. Carol Massar.
This stock has been on a tear since early May.
Tim Stenovec.
So take us into the economic impact of this.
Along with reporters and editors who help make your business week profitable.
Let's dig into it with Bloomberg Business Week editor Joe Weber.
It's the cover story of the upcoming issue.
Bloomberg Business Week. Weekday afternoons at 2 Eastern.
These are retailers that have been on everybody's radar.
Those Apple numbers continuing to come in.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
You're never completely ready to adopt a teen.
For late nights writing English papers.
For your teen's music taste.
For dinners, where they talk more on their phone than with you.
For the first time, they call you mom.
You're never completely ready to adopt a teen, and you can't imagine the reward.
To learn more about adopting a teen, visit adoptuskids.org.
Brought to you by the U.S. Department of Health and Human Services, Adopt U.S. Kids, and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Introducing Bloomberg Quick Take. Our global stories take on tomorrow today. Watch live news on the events changing your business and your world, and go deeper with original shows on business, technology, politics, and culture. Don't settle for a news network built for yesterday. For a global view and an informed take, Bloomberg Quick Take. Now streaming free on Bloomberg.com/quicktake. Brought to you by Accenture, American Express, and AT&T Business.
145 over 92.
180 over 111.
182 over 100. And I had a heart attack and a cardiac arrest. And then a stroke.
Your blood pressure numbers could change your life.
A lot of people don't understand, including myself, I didn't, now I do, the impact of having a stroke.
My memory is shot.
When I woke up, I couldn't speak.
Lowering your high blood pressure could save you from a heart attack or stroke. If you've stopped your treatment plan, restart it or talk to your doctor about creating one that works better for you. Start taking the right steps at manageyourbp.org.
It's a new life, but I'm going to make it better. Coming back. Ask your doctor, check your blood pressure.
Brought to you by the American Heart Association, American Medical Association, and the Ad Council.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Stock trading, extremely choppy. In fact, it's like watching a table tennis match where the players are pretty good. Gains in companies that stand to benefit the most from an economic rebound offset losses in the tech sector. Let's look at those numbers. The S&P is up 0.25% up 10. The Dow's up 0.5% up 188, and the Nasdaq is down 0.1%, down 17. The 10-year is down 1/32. The yield 1.49%. West Texas Intermediate crude's off by 0.3% at $74.80 a barrel. COMEX gold is a little change now at $17.57.80 an ounce. The dollar yen 111.07. The euro $1.1595. The British pound $1.3552. The word transitory may not see as much use in the near future. This story caught my attention. A closely watched measure of U.S. inflation rose the most on an annual basis in 30 years, fueling concerns that price increases will last longer than expected and eventually hit consumer spending. Did that get your attention? Personal Consumption Expenditures Price Gauge, which the Federal Reserve uses for its inflation target, rose 0.4% from a month earlier and 4.3% from a year earlier. The annual increase was the largest since 1991, the Gulf War. You remember that. That's a Bloomberg Business Flash. Bloomberg Markets continues now. Kaylee Lines and Paul Sweeney.
Now on Bloomberg Markets, Munis in Focus with Joe Mysak.
All right, this focus on munis is brought to you by Build America Mutual. When the market is volatile, BAM provides stability. BAM-insured municipal bonds deliver default protection, value preservation, and a durable rating. Ask your broker about BAM-insured municipal bonds. All right, well, everybody who is paying attention is getting a real look at how the sausage is actually made in Washington, D.C. And it's not always pretty. That's the easy way to say it. The municipal bond market, do they care? Let's ask Joe Mysak, editor of Bloomberg Brief for all things municipal bonds. Joe, do municipal bond buyers care about continuing resolutions and infrastructure bills and spending and taxes and all that kind of stuff?
Oh, boy, do they, Mr. Sweeney. I'll tell you, the market has been looking at this infrastructure bill with bated breath because it contains the return of tax-exempt advance fundings, which were prohibited under the 2017 Trump Tax Act, Jobs Act, and Tax Cut Bill. And, you know, there's also the return of Build America bonds in this in the infrastructure bill, and there's all sorts of spending money for different projects, naturally, highways, bridges, and all those good things. So people have been watching this and are really hoping that this passes. Yeah. They'll be very disappointed if this doesn't come about.
Well, that's what we're watching in kind of the world of government policy at the federal level, but on the state level, a story out of Texas caught my eye today. J.P. Morgan getting kicked out of the muni business in Texas because there's a new law banning government work with banks that limit businesses in the firearms industry. Could there be a wider fallout from that?
This is just, pardon the pun, but by passing this legislation, the state is sort of shooting itself in the foot.
That's a good point.
And all its issuers, because here's the biggest bank, and by saying they don't want certain Wall Street banks to bid on their bonds, it means there's fewer bidders, and who knows what kind of price you'll get. So, are other states likely to do this? I don't know, maybe some of them, but you'd certainly hope not. You'd certainly think that people could differentiate between banks' lending policies and their own localities' borrowing policies. It's just one of the more idiotic things I've seen this year in the muni market, and we've had a wild, crazy year.
You've had a good year in terms of performance, a good year in terms of fund flows and issuance. What's the outlook for 22? Can it be even better, or do we have to have a natural just kind of pause in that muni bond market?
Well, I'll tell you, performance is always so difficult to gauge, especially if you're looking in the future. But I'll tell you, just this week, we've seen the high municipal bond new issue supply of the year, the 30-day visible supply, we call it, at over $17 billion. And we've seen yesterday was the high for trading in the muni market. So things are really cooking on all cylinders, and certainly people expect, there's a little bit of retrenchment in some banks' views of the market this week, saying, well, we're probably not going to see a record year this year, which is what we thought. But, you had a record year last year. So, the beauty market is very buoyant right now.
All right, Joe, it is 11:23 a.m. on a Friday, which means I'm very close to my weekend and thinking about spending all day Sunday on the couch watching football. So can we talk about the Chicago Bears?
Oh, boy.
Because that has a muni market impact.
The Bears. Wow. I saw that story by Shruti Singh out of our Chicago bureau. Could barely believe it. But here the Bears are buying an old racetrack in about 35 miles from the city in Arlington Park. And our Brian Chapano wrote a column about it because he's from there. And he thought it's pretty likely that they're going to move when they can. And, I think their lease runs at Soldier Field till 2033, but they could break it earlier if they get a certain amount of money, which decreases the closer to 2033 you get. And that is just a heartbreak for the city. It doesn't cost that much, in terms of actual revenue that's brought in, but it's a real, it's a heartbreak certainly for a lot of the Chicago City fans.
I was surprised that even after the renovation to Soldier Field, it only holds 61,000 people. I mean, that's just tiny compared to NFL standards when these things are holding 75, 80,000 people. So, it's interesting to see, but it's been there forever, Soldier Field. So we'll have to keep an eye on that. All right, Joe, thanks so much for joining us. Enjoy your weekend. Joe Misek, editor for Bloomberg Brief, covering the municipal bond market. And it's just interesting here when you think about that story from Texas was really surprising because I would think the other big banks like a Citi, like Bank of America, they probably have similar positions. And boy, you're going to be left with just a handful of regional banks maybe bidding on your bonds. And that's not a good thing. You need some big banks for some of the big issuance coming out of the big state of Texas. Of course, everything is bigger down there, we know. So we'll keep up on that story as well. This is Bloomberg.
This is Bloomberg. If knowledge is power, the Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the terminal can take your workflow to the next level at Bloomberg.com/professional.
90 Minute. More companies are imposing vaccine mandates for their workers after President Biden ordered large employers to require shots or weekly testing. Researchers at consulting firm Gartner say 16% of companies had mandates last month. Another 13% plan to put one in place. As the holidays approach, some employers are getting desperate. Jobs website Indeed says over 10% of its holiday job postings last week said hiring was urgent, 10 times more than last year. Many of those jobs will probably go unfilled in the labor shortage. The big accounting firm PwC PricewaterhouseCoopers is introducing a work anywhere policy for its 55,000 U.S. employees, allowing them to choose an all virtual work option in a bid to keep and attract workers. Choppy trading to kick off the new quarter. Gains in companies that stand to benefit the most from an economic rebound, offsetting losses in technology shares. The Dow rising 70 points with the S&P lower. Courtney Donahoe, Bloomberg Radio.
Neil Armstrong waited 6 hours and 39 minutes to step onto the surface of the moon. Jackie Robinson waited 20 months to play his first game with the Brooklyn Dodgers. And even DiCaprio had to wait 22 years to win an Oscar. You can wait until your destination. Don't text and drive.
visit stoptextsstopwrecks.org. A message brought to you by the National Highway Traffic Safety Administration, Project Yellow Light, and the Ad Council.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the terminal can take your workflow to the next level at bloomberg.com/professional.
Would you say it's more important to gather information fast, or to have it first, or to be the most accurate?
They can really move the needle when it comes to programs.
The point in all this surely is the level of support you'll get from companies for this.
What if you don't have to choose?
It also has enormous importance for the labor market.
How do they get ahead of different administrations?
We see this move towards digital currencies.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
145 over 92.
180 over 111.
I had a heart attack and a cardiac arrest, and then a stroke.
Your blood pressure numbers could change your life. Lowering your high blood pressure could save you from a heart attack or stroke. If you've stopped your treatment plan, restart it or talk to your doctor about creating one that works better for you. Start taking the right steps at manageyourbp.org.
Now I'm, trying to get better, stronger than ever.
Brought to you by the American Heart Association, American Medical Association, and the Ad Council.
NJIT makes the workforce of the future, and Greg Sauter, a member of NJIT's Board of Overseers and president of engineering firm WGI, says NJIT graduates have the in-demand skills that drive today's tech-powered workplace.
Our world is moving to a place of connecting the physical with the digital. In the field of engineering and infrastructure, there's not a thing that we do that's not being changed by technology. We've gone from two-dimensional renderings to immersive, augmented, and virtual reality. Solution sets used to be solved one at a time. Now we can run nearly an endless alternatives analysis and optimize the output. And how we construct that future, from autonomous equipment to 3 and 4D printing. NJIT students graduate with that critical understanding of the cyber-physical world and how we move between them, but with that all-important grounding in applied STEM principles.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Burden LLP Accountants and Advisors presents Tax Chat with Mark Boswick, managing partner and leader of Burden's Family Office Services practice.
Every family office is different and needs an advisor who takes the time to ask the right questions to develop a clear understanding of the goals and needs of the family. When choosing an advisor, it is important to select one that will invest the time to understand the desires of each family member, as well as the dynamics and economic realities facing the family as a whole. Burden does this, which enables us to offer a wide range of services, including daily bill pay, portfolio review, and complex tax planning to help preserve a family's wealth while making their lives easier. If you're a high net worth individual or head of a family office, let Burden help protect you, your family, and your business.
For more Tax Chat from Burden Accountants and Advisors, visit burdenllp.com. That's BERDONLLP.com. Burden Accountants and Advisors. We listen, we solve, we do.
Okay, man, this is your time. Maybe you didn't choose this, but you're here now. You're gonna go out there and be an all-star caregiver. Cook, clean, be there emotionally and physically. You gotta dig deeper. Drive them to physical therapy, doctor's appointments, because that's what caregivers do. Don't give up. Show the world that you're tougher than tough. Caregiving is tougher than tough. Find the care guides you need at aarp.org/caregiving. Brought to you by AARP and the Ad Council.
It's the closest thing you can find to a masterclass on how the world works.
The United States has lost a tad of credibility.
Bloomberg Balance of Power.
Are we fulfilling those commitments at this point?
Weekdays at noon Eastern.
Can you give us the priorities?
On Bloomberg Radio. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130. To Washington, D.C. Bloomberg 99.1. To Boston. Bloomberg 106.1. To San Francisco. Bloomberg 960. To the country. Sirius XM Channel 119. And around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
All right, coming up in this half hour, we're going to chat with Shatil Prasad, small and mid-cap growth portfolio manager at Jennison Associates, get her thoughts on these markets. Plus, we're going to take a look at the emerging energy crisis. We'll do that with Leslie Bayer, CEO of Energy Workforce and Technology Council. This is going to be a big issue for the foreseeable future, most likely. But first, let's go to Greg Jarrett, Bloomberg News, and get a Bloomberg Business Flash. Greg.
Paul, it appears some optimism has been injected into the markets. Energy, financial, and industrial shares are currently leading gains in the S&P, while the tech-heavy NASDAQ is fluctuating near even. The benchmark gauge of U.S. equities is still headed toward its biggest weekly slide since January, but is certainly up at this point. President Biden has signed a stopgap spending bill to keep the government open until December, but Congress still needs to act on the debt ceiling, or the government could default in as soon as 17 days. Experts think that will not happen. However, former Treasury Secretary Larry Summers says there's always a chance.
People who play games of chicken never plan to crash their cars and die, but occasionally they do. And that's the risk in this thing. And I hope people will find a way to recognize reality.
Let's look at the market optimism of which I just spoke. The S&P 500 is up 0.3%, up 15. The Dow is up 0.6%, up 207. And the NASDAQ is up about 0.1%, up 11 now. The 10-year is down 230 seconds. The yield 1.49%. West Texas Intermediate crude has reversed course, spending most of the day in the red. It's now up 0.3% at $75.25 a barrel. COMEX gold's up 0.2% at $17.60.30 an ounce. The dollar yen 111.09. The euro $1.15.93, and the British pound $1.35.55. That's a Bloomberg Business Flash. Bloomberg Markets continues now with Kaylee Lyons and Paul Sweeney.
All right, Greg Jarrett, thank you so much. We appreciate that. I want to bring in right now Shatil Prasad, small and mid-cap growth portfolio manager and equity research analyst at Jennison Associates. Shatil, here at Bloomberg Radio all day, we've been focusing on what's going on down in Washington, getting some of these bills passed. Do the good folks at Jennison, do they care, or are you guys just focusing on what are earnings going to be next quarter, next year, that kind of thing?
Hey guys, it's good to be with you again, and it's actually a really funny question because I think for the most part we aren't really as concerned with it, and I don't know if even the markets are. Admittedly on our team, and we're on a morning meeting every single day. We're just not talking about the infrastructure package, the social package that DC is talking about. Instead, we're really focused on more immediate issues like inflation, interest rates, the supply chain disruptions, COVID, and things even like China and the power shortages there. So to your point, I think we're focused more on immediate term issues that are affecting our investments, and looking forward to what companies will say on third quarter earnings.
Yeah, so Shatil, as you look at kind of all of these medium-term issues that you just listed out, especially the supply chain as we approach earnings season, how is that affecting your investment thesis at this point?
It's a real challenge, for pretty much all of our companies across all of the sectors. So, we at Jennison, we invest in companies broadly, whether it's tech, healthcare, industrials, or consumer. And there is very few parts of the economy that have been untouched by the supply chain issues. And I think what we're trying to do on our team is really figure out, is it really transitory, as the Fed has suggested it, or is it going to be more persistent? I think what is clear is that the alleviation in some of the supply chain issues, whether it might be labor or products coming from China, is going to persist for longer. And so what we're looking at with regard to our investments is the demand environment still strong, and can our companies mitigate some of these supply chain challenges, still put up decent earnings, and the hope is that the economy just stays, stronger for longer.
And Shatil, that's a big topic, that being the supply chain issues. That's a topic that Kaylee and I and Matt, we spend a lot of time talk to as many and as diverse group of people as we can on this issue. It just feels like, it's a global issue, number one. And number two, it doesn't seem to be abating at all. I mean, it's not just microchips, and it's everything. And it includes logistics, transportation. How do you guys think about that? Are you discounting that this could be a bigger issue for longer?
It's a really tough question, and certainly at the top of mind for everybody. I do think that the pandemic has created some near-term and medium-term challenges in that things shut down and our economy shifted from a service economy to a more product-oriented economy, and the ability for so many manufacturers across the entire global supply chain just couldn't ramp up fast enough. Couple that with COVID-related shutdowns, government stimulus that are impacting labor. We just have a real tight crunch. Now, I think one by one, some of these issues will resolve, but it's not resolving at the speed and at the pace at which I think most people expected. So I do think that we are expecting that this is going to happen. In the longer term, I do think that things will resolve. Investments in automation, investments in reshoring, getting supply chains closer to manufacturers. Yeah. All of that will be deflationary at some point, but it's going to be a lot longer than we thought.
We're also looking for resolution, as Paul said at the top, on Capitol Hill, and I just want to kind of pick apart why you aren't interested in infrastructure spending, because coming into 2021, as we looked at those runoff elections in the Senate in January, the narrative was if we get a blue sweep, we're going to get a ton of fiscal stimulus. That's great for domestic stocks like the small caps. So is the small cap thesis not predicated on getting some of that longer term domestic oriented spending?
I would say to you that it is the fact that we're very close to getting anything done in Washington is a really positive signal. Having said that, as we just talked about with supply chains, if we do see an infrastructure bill, first of all, a lot of times what happens with many of these funding packages, it takes a while for some of those monies to actually flow down to the local municipalities. So, we might not see the money or the economic boost of that, at least for some period of time. The other thing I would mention is that some of the things that are actually in the infrastructure package are things that we at Jennison are already investing in, be that 5G, the broadband, electric vehicle charging stations, and just, many different things to, again, bring back manufacturing and supply chains to our, to the U.S. shores. Yep. So I think what we expect to see is the infrastructure would help sustain the economic growth that we're seeing today rather than boost it, because the truth is we don't have the labor or the materials to actually
that's
do
fair.
work.
That's fair enough. All right, Shatil, thank you so much for joining us. As always, Shatil Prasad, Small and Mid Cap Growth PM at Jennison Associates. Right now, let's head down to Washington, D.C. World and National News with Amy Mars.
Thank you, Paul. New vaccination guidance for federal employees. Workers will have to prove they were vaccinated by November 8th, or they face suspension and possible termination. The Office of Personnel Management Guidance encourages agencies to collect vaccine cards from workers. Anyone who hasn't gotten their final vaccine dose by November 9th should be given a 5-day grace period before they are suspended without pay. Workers who don't get their shot after that will be fired. Any new hires to the federal government are to be fully vaccinated. There are signs that business travelers are getting back in the air, but now that COVID vaccines are available and cases are slowing, Dave Harvey with Southwest Airlines says they're seeing an uptick.
In March, we really started seeing about a 5-point increase month over month, so some nice momentum.
Southwest Airlines' Dave Harvey, and there had been debate over whether big businesses should stick with the Zoom calls, which became common during the pandemic. Well, this week, Southwest is selling Fortune 200 companies on the benefits of face-to-face meetings, especially in sales. Nearly 700,000 people have died of COVID-19 in the U.S., and about half of those deaths have been in the past 9 months, caused by the fast-moving Delta variant. So as things stand now, around 2,000 Americans are dying each day from the coronavirus. House Democratic leaders are still trying to push that big infrastructure bill over the finish line. They're working on it right now. House progressives are threatening to vote no unless there's a corresponding vote on a much larger social spending bill. There's a lot of debate over how big it should be. Democrats are meeting at this hour to continue those talks. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
President of the
The world's financial decision makers connect on the Bloomberg terminal. The buy side and the sell side together, collaborating across markets and countries in real time, sharing ideas, negotiating trades, and forming an influential network of over 325,000 financial professionals that helps power global markets. Isn't it time you join them? Request a demo at bloomberg.com/professional.
Jewish Communal Fund, Zoya Raines and her husband Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up to date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
I spend a lot of time in the garage, but even more time in the rain, sleet, and mud. In 95, I helped tow your moving trailer. In 05, I helped you get out of a ditch. Yeah, I know I'm a bit rusty, and sadly in 09, it was sparks from me, your handy chains, dragging behind your truck that accidentally started a wildfire.
Sparks from dragging chains can start a wildfire. Spark a change, not a wildfire. Visit SmokeyBear.com. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Only you can prevent wildfires.
Economics.
Chairman Powell looks brilliant.
Finance.
Some breaking news for you. A share sale.
Investment.
The narrative of the reopening trade has changed.
The Bloomberg Surveillance Podcast.
Do you want some volatility, Tom? Please. Do you want me to go there?
Tom Keene, Jonathan Farrell, Lisa Abramowitz, and the names that shape the world's markets.
Joseph Stiglitz of Columbia University, the laureate.
Bloomberg Surveillance. Listen today at Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts.
How are financial services firms managing in this new reality? Claire Santaniello, Managing Director at BNY Mellon's Pershing, explains.
If the current times have taught us anything, it's the critical role that technology plays in client relationships. Global conditions have created a business imperative for firms to digitally transform the way they meet client needs and the way they work. Pershing's industry-leading technology enables you to adapt to the evolving ways your clients want to do business, now and in the future, and can help you build an even stronger digital client experience in a simpler, smarter, and safer environment. We have worked with clients of every size to transform their business. Pershing gives you the foundation to stand on, plus our unique perspective, to help you run your business even during the most uncertain of times. We help you consider everything.
To learn more about how Pershing can help you transform your business, visit Pershing.com. Pershing LLC, member FINRA, NYSE, SIPC.
If you love them enough to listen to them practice the same song on tuba,
please be done.
Over and over and over and over and over, then surely you'll check nhtsa.gov/the right seat to make sure they're correctly buckled in the back seat.
Sounds good, honey.
Check today at nhtsa.gov/the right seat. Brought to you by the National Highway Traffic Safety Administration and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seizechange.
Tech talent is in high demand at Avanade, a joint venture between Microsoft and Accenture. That's why Avanade executive Brett Newton says the company is funding student scholarships at NJIT and earmarking them specifically for women in STEM fields.
What I really like about Avanade's scholarship program with NJIT is it's more than just a financial investment in the students. It's a relationship that we bring them into. We picked NJIT because it's a very different technical university. It's deeply rooted in solving business problems with technology, which is very much like Avanade. They're non-traditional in that they are much more focused and active in marrying technology to solving world problems and society problems. That's not normal of a lot of the engineering schools that we've had relationships with in the past. NJIT is very innovative and very entrepreneurial.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Stocks are making the turn and heading higher. A healthy surge. Someone appears to be optimistic. Let's hear it for the cyclicals, and tech isn't doing so bad either. In fact, let's check the numbers. The S&P is up 0.6%, up 27. The Dow's up 0.9%, up 290. And the NASDAQ is up 0.25%, up 40. The 10-year is little change. The yield 1.48%. West Texas Intermediate crude has moved into the green. It's up 0.3% at 75.29 a barrel. COMEX gold's up 0.3% at 17.62 even per ounce. The dollar yen 111.01. The euro $1.1603. The British pound $1.3572. Did you ever get a check from a company and didn't know why, and you kept it and didn't tell them it was a mistake? A bug in a recent update of decentralized finance platform Compound sent users nearly $90 million worth of cryptocurrency. Oops, it was a mistake. Its creator CEO is now begging users to voluntarily send it back. The glitch is a black eye for cryptocurrency platforms hoping to upend the traditional finance system. DeFi platforms don't have banks or other middlemen administering funds, instead relying on smart contracts. Maybe not that smart this time. That's a Bloomberg Business Flash. Bloomberg Markets continues now. Kaylee Lines and Paul Sweeney.
All right, Greg, Jared, thanks so much. We appreciate it. I feel like a story that's quietly sneaking up on the markets is rising energy prices and potentially a little bit of an energy crisis here. I'm looking at WTI crude oil up again today, over $75 a barrel. Nat gas, just since April lows, has more than doubled. Just extraordinary. We're seeing some issues in the UK and China. Let's get a better handle on this with Leslie Beyer. She's the CEO of the Energy Workforce and Technology Council, based in where else? Houston, Texas, where a lot of the oil and gas folks are. Leslie, give us your 30,000-foot view of kind of the global energy market. Do we have a brewing problem out there?
I think we do. Paul, thanks for having me on the show. You know, we've had underinvestment in oil and gas, and with increased demand, you know, everyone's trying to recover from the pandemic. There's certainly increased demand in Asia. We need to be able to produce oil and gas to deliver that here. And I represent about 500 companies in the energy services and technology sector that do just that. And they develop technologies to develop oil and gas in a much cleaner and, you know, a more productive way with fewer emissions. And we need to be able to do that in the U.S. We definitely don't want to see our president asked OPEC, we don't want, Russia and Saudi Arabia developing that for the world. We want to be able to do it here.
Yeah. So, Leslie, let's talk about how quickly that can actually happen, because when it comes to kind of supply-driven shocks like this, oil, it's pretty easy to pump more because the infrastructure exists and you just decide the amount that you're actually going to pull up out of the ground. How easy is it to get more natural gas or, other forms of energy?
Well, the domestic energy producers have created a shale revolution, since 2014. And it's not easy, but the technological development is there to produce this oil and gas. But we've had poor policy choices and reduced investments in the sector that are blocking us from being able to produce what we need. So, that's really kind of the key point, is that if we can produce it in the U.S., we can do it. We're ready to go. U.S. producers are, kind of sitting on their hands right now because of markets, because of investors. But if the world needs oil and natural gas, and they do increasingly, especially to deliver to China, we've talked about what's happening with the energy crisis in China. We need to be able to give them the natural gas that we have so they're not burning coal. This achieves environmental goals as well. And like I said, we can produce it cleaner and safer here in the U.S.
And Leslie, when I see oil above $70, I always just say to myself, I've seen this movie before. The shale guys, the fellas and the ladies down in Texas and Oklahoma, they're going to throw caution to the wind and start digging up the ground, putting some more wells in there. But this time it seems a little different. It looks like they're listening to their shareholders. They're listening to their bondholders and generating cash, returning the cash to shareholders, and not investing in the business. Do you think that will change?
I think it has to change, not only for the U.S. economy, but for that workforce. The workforce that I represent in energy services and technology, that is 600,000 jobs. Those are men and women working every day, very highly skilled, and they know how to deliver energy at scale. And they have got to be able to do that. There are a ton of innovative technologies coming out of the sector right now, everything from carbon capture, e-frac, monitoring, remote monitoring, all kinds of machine learning and AI. And we are able to do that. So, yes, those companies have been, kind of sitting on their hands a little bit, but they're starting to, return cash flow, and they need to reinvest in the business again, because we will lose that market share, certainly to Saudi Arabia and Russia, who are eager to produce.
Well, Leslie, let's talk more about the energy workforce and how it may be changing, because obviously there's an ongoing debate now on Capitol Hill about long-term infrastructure spending. A lot of that is green infrastructure and kind of pushing more toward the clean energy transition. How easy is it to transition jobs for workers who are in the oil and gas industry into clean energy jobs?
The critical thing to know about that is the existing energy workforce is the one that we need for those jobs. They are very highly skilled, highly technical, and they know how to deliver energy at scale. So a lot of the technologies, for example, hydraulic fracturing, a lot of my companies are involved in frac. That technology is very similar to geothermal development. Those engineers know exactly how to do that. Companies that build, pieces for rigs, they also build pieces for offshore wind platforms. It is all the same. And so what's happening right now is traditional oil and gas development companies that have been involved in that are getting pushed away from their seat at the table, but that's where they need to be. That's the workforce that we need. And it's becoming more highly skilled. It's becoming more diverse. We're able, increasingly to attract women. We're paying attention to that and really trying to build a more diverse workforce that's going to continue to innovate and get us where we need to go in oil and gas.
Hey, Leslie, we're hearing so much about this global supply chain challenges that are out there from companies and sectors around the world, across the board, it seems like. And you talk to your energy companies. What are they telling you about some of the challenges they're facing in terms of the supply chain?
We certainly have had supply chain issues. And for a while, even the previous administration, trade has been tough for us, specifically with China. These companies are certainly working to develop new supply chains, but the equipment that is developed that they use is similar to what NASA uses, on the moon and Mars missions. These supply chains, they cannot turn on a dime. And so, with reduced investment, it makes it much more difficult for companies to be able to transition the supply chains, but they certainly are a way from China and hopefully to more U.S. development, because that's where we need to create the jobs, these highly technical ones.
All right. Well, we will certainly need more workers out there in the economy broadly, but we also need more energy, Paul, in a lot of places. It's not a huge problem here in the U.S. yet, but the U.S. and China, man, they are really dealing with it.
Yes, it is. And again, I just when you see oil at these levels, again, historically, what you've seen is the supply come onto the market. But, these, at least in the U.S., they've been pretty disciplined. And the question is, how long can they continue to do that? So it'll be interesting to see. But again, we're keeping our eyes focused on the UK. They've got their issues. Most of that is transportation related. China also has issues in terms of securing enough energy. And we're seeing it in the markets. Nat gas, just that commodity just ripping. And of course, WTI crude over $75 a barrel. Brent near $79 a barrel. So that's going to be an issue. We'll see what we hear from some of these companies coming up in earnings periods, as they, where energy is a big part of their cost of goods sold, and where the pressure is there, where the inflation is there. All right, that'll wrap it for this week. Kaylee, thanks so much for sitting in for Matt. Coming up, Balance of Power with David Weston. He's going to have the latest coming out of Washington, D.C. This is Bloomberg.
Listen.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the Terminal can take your workflow to the next level at Bloomberg.com/professional.
4 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio. From the world of politics to the world of business, this is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. Well, it's 1 down and 3 to go. Congress and the president took care of funding the government yesterday and beat that midnight deadline. But they still have infrastructure, the budget, and the debt ceiling to address. To take us through it all, we turn now to our Washington correspondent, host of Sound On Bloomberg Radio, Joe Matthew. He is at the White House today. So, Joe, as I say, 1 down, that's good. We're going to keep the government going. That's a good thing. But what's next?
Yeah, no shortage of crises on a beautiful day here in the nation's capital, David. What's next is infrastructure, or so we think. Nancy Pelosi left the House last night after midnight saying there would be a vote today. Now, of course, this follows hours of negotiations that led to no deal last evening, no vote on the bipartisan infrastructure bill. And we're not entirely sure if it will actually happen today, remembering that Nancy Pelosi at this time yesterday told reporters that she was aiming for a vote, expressing confidence. She suggested almost as a negotiating tool. She says that's what you have to do, is lean in toward the end of a bargain like this. We saw the White House get deeply involved last night as well, and throughout the day, with domestic policy advisor Susan Rice and economic advisor Brian Deese and some others shuttling between the Speaker's office and those of lawmakers, including Senator Joe Manchin, who, as we learned together on the air at this time yesterday, David, gave his top line number at $1.5 trillion. Now that we have that detail out, the White House is getting much more directly involved in what is happening, trying to make sure that we get some kind of a deal here. Jen Psaki, the press secretary, saying that as Democrats huddle on Capitol Hill, that they're open for business here and they're ready to talk. She actually issued a statement not that long ago, late last night, early this morning, saying a great deal of progress has been made this week and we are closer to an agreement than ever. She adds, though, David, we will need some additional time to finish this work. That's where we are now. It could be another long day on both ends of Pennsylvania Avenue. And if they don't get a vote today, David, it could be a long and working weekend.
Yeah, Joe, you're being a little bit modest there. We found out about that $1.5 trillion number, at least here on Balance Park, because you were up there in that gaggle with Senator Joe Manchin. But let me ask you specifically about how much clout, political clout, the White House has in this negotiation back and forth. I understand they really want it badly. They're having a lot of meetings. But I heard somebody yesterday make an really interesting point. Actually, it appears right now, if you look at the polling, that both the infrastructure and the Build Back Better are more popular than the president is. Can the president really help get it over, or does he need them to get that so his popularity goes up?
It's interesting as you turn this thing around and look at it that way, David. I think you're onto something here. Joe Biden needs a win. This is everything he campaigned on. If you look inside what is supposed to be in this reconciliation bill, the expansion of Medicare, the child care component, not just the hard infrastructure that they could vote on today. This is what he got elected on and is now why he's in this White House. So, yes, to your point, Joe Biden needs to work out a deal here. But remember, they didn't see yesterday so much as a deadline as Nancy Pelosi did in the House. She made that promise to moderate Democrats. This White House sees some time left to score a deal, to bring parties together. And as I mentioned, now that the cards are on the table, this White House hopes that that will be a little bit easier. David?
Yeah, and in fairness, they met the one deadline they had to make, which was keeping the government open. Thank you so much to Joe Matthew. He's the host of Sounddown. That airs weekdays at 5 p.m. Eastern Time on Bloomberg Radio. We're going to turn now to one of those trying to plow through all of this up on Capitol Hill, Democratic Congressman Sean Casten of Illinois. So, Congressman, thank you so much. I understand you came out of the Democratic caucus to talk with us. Really appreciate it. Give us a sense of what's going on in that caucus right now.
So I'm really encouraged. You know, we ran last cycle on the promise of doing all of these things, lowering prescription drug costs, dealing with the climate, building out our infrastructure, and we're going to get it done. I've always been partial to Duke Ellington's line. I don't need a goal, I need a deadline. And we made a lot of progress over the last 48 hours with respect to moving some folks along. And, you know, if it takes another day, if it takes another 30 days, that's okay. I'd rather be in a position where we say before we inject a couple $1 trillion into the economy, we've sorted through all the equities, than rushing it through because of an artificially imposed deadline. But I'm confident we'll get it done.
Yeah, well said. And I will infer from that it's possible that we won't make this latest deadline from Nancy Pelosi, the Speaker of the House, saying they would vote today. Maybe yes, maybe no. At the same time, what's going to change? Because there's been a lot of negotiation already. You seem to have an impasse here. What's going to change within the caucus that will get it done?
Well, look, I think every single person in the caucus, to a person, wants to make sure that we have the infrastructure package done, that bipartisan infrastructure framework that came out of the Senate, and this broader reconciliation package, the Build Back Better Act. What I think is tricky is that the provisions in the Build Back Better Act are things that were incompatible with a bipartisan framework. It's tragic. I spent 20 years as a CEO in the energy industry. I'm as middle of the road politically as you get. But it's tragic to me that if we're prioritizing lowering drug costs, if we're prioritizing climate, we can't do that in a bipartisan framework. So really the push and pull right now is just making sure that with very thin majorities in the Senate and with essentially one entire party that has said we are not going to cooperate in this discussion, we're doing what legislators do. We're negotiating the parameters of a bill, but we're doing it with one arm tied behind our back because the Republicans have chosen not to participate. So we'll get it done, but it's a little harder when any one person may have an issue that can tank the deal.
Yeah, when it comes to the Build Back Better part, it looks like it's going to have to be the Democrats. If it gets done at all, it's going to be the Democrats pretty clearly. Give us a sense of how the Democratic caucus reacted from your sense of talking to your colleagues up there to Joe Manchin's proposal yesterday. Let's take the $3.5 trillion down to something like $1.5 trillion. Is there any appetite for that?
Well, I think what's hard and what we're finally starting to get some clarity from Manchin is that the top line number fundamentally doesn't matter because it's fully paid for. The cost of this bill to the American, as far as the actual net change in our fiscal situation, is zero because it's fully paid for. The question really becomes what's the substance of the bill, and Senator Manchin and Senator Sinema prior to yesterday were really pretty unclear as far as what are the things you don't like. Do you think we should not help out, struggling children who are below the poverty line? Do you think we should kick the can down the road on climate, until maybe someone with leadership skills we lack can deal with this? We're starting to get some clarity, but I think the press points on this are really going to be the substance of the policy, as it should be, not the headline number, because the headline number will be paid for one way or the other.
Okay, so Congressman, hindsight is always 20/20, and it doesn't do much good to say what could have happened. But given what you just said, that the number doesn't matter that much, do you think that some people made a mistake by putting that number out there? Because it surely made a big bogey for the Republicans to shoot at.
Well, yeah, I mean, as you said, hindsight is 20/20. It's important to understand we have a $20 trillion economy. We're talking about $3.5 trillion over 10 years, $350 billion a year, of which is fully paid for. That's a rounding error in the economy. You could make the case for us being much stronger, but I think it's much more important that we really talk about the provisions that are in there. Again, People really like those provisions in it. And we're talking about giving people on Medicare the ability to finally have dental and vision care. That's really important to people. Extending the child tax credit, those checks that people are getting now, extending those and making them permanent. Providing a whole bunch of clean energy incentives so that we can build out transmission systems and clean energy, the clean energy power plan to make sure that we give a better planet to our kids than the ones we have from our parents. Those are really popular. Let's get those all done, and yes, let's talk more about those and not the number, which is, again, the one you're spending from this number is a very small part of the total U.S. economy.
Tip O'Neill famously said all politics is local. I believe it was Tip O'Neill. Take us back to your home district. When you go back there and talk to your constituents, what do they make out of what's going on right now in Capitol Hill? I mean, the whole thing, the debt ceiling and the funding the government, everything else. Can they understand what's going on?
I think sometimes we get caught up in our own knickers in Washington. You know, when you talk to people about what their real day-to-day issues are, people are concerned about COVID. It still is a top issue. People are concerned about, you know, can we trust that this 275-year-old experiment in democracy we have is going to be robust in the wake of what happened on January 6th? Those are the issues that matter to people. Are they going to be able to know that if they get to a point in their life where all of a sudden they aren't working anymore, will they have enough money set aside to pay for their health care bills? That's what people care about. This inside baseball stuff about the process and who said what to who and what you think about Joe Manchin, I guess it makes good television, but nobody really cares outside of the Beltway.
So, Congressman, finally, I want to go back to yesterday when you asked some questions of Secretary of the Treasury Janet Yellen about the debt ceiling. I mean, you basically said, should we have this thing at all? And she responded in some substance, look, if you appropriate money, then why do you put it on our shoulders to figure out how to pay for it? Why are you putting us in this jam? Should we have a debt ceiling?
Absolutely not, and I'm delighted that Bill Foster has introduced this bill to eliminate the debt ceiling. And it's important for your viewers to understand, every member of Congress votes on spending packages. We may vote for, we may vote against, but the majority rules, and the majority decides how we're going to spend our money. Every member of Congress votes on tax policy. So how much of the spending that we do is going to be paid for by taxpayers? The residual that remains is debt. We don't get to go back and second guess in the future, I don't want to pay for that. We don't get to go back and second guess in the future and say, hey, you taxpayers, you don't have to pay, you can just opt out of this. And we have this completely manufactured crisis in the debt ceiling where we have given Congress the ability to say, I don't want to pay the debt. That is an act of suicide to choose not to do that. It destroys the financial markets. $8 trillion of the current deficit was built up under Trump. And to now have the entire Republican Party say, yeah, I voted to add debt to the economy, but now I don't want to pay my bills. My view is that says that if you have a weapon of mass destruction and you choose to use it, you shouldn't be allowed to play in the toy box anymore.
Okay, Congressman, thank you so very much. That was really helpful. That's Congressman Sean Casten, Democrat of Illinois. Coming up here, continued signs of inflation from numbers out this morning. We talk about them with Julia Coronado of macro policy perspectives. And a programming note now, I'm going to be anchoring live from Capitol Hill next Tuesday and from our Washington Bureau next Wednesday and Thursday. Highlights will include Senator Dick Durbin from Illinois, Anthony Fauci, and Simone Sanders from the White House. This is Balance of Power on Bloomberg Television and on radio.
When was the last time you felt fully informed on world and economic affairs?
Is GDP catching up with the zeitgeist, or are we going to have to catch up with a boom economy?
That might have been it.
Is that a move that's accompanied by better bank stock performance?
Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
It strikes me the degree of policy uncertainty for economists to factor in.
Bloomberg Surveillance, weekday mornings at 7 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
So I could play sports and see my friends without having to worry about anything.
I'm ready for concerts to be back and just have a life again.
So I can actually eat pizza at my favorite pizza place.
Because I'm ready to travel again.
So that I can sit on the couch, read my granddaughter books, and hug her when there's a happy ending.
We each have our own reason for why we're getting vaccinated against COVID-19. What will yours be? Visit getvaccineanswers.org for information on the COVID-19 vaccines. It's up to you. Brought to you by the Ad Council.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
A turnaround into the green. Stocks climb as prospects for an economic recovery outweigh concern over faster than estimated inflation at a time when the Federal Reserve is getting ready to wind down stimulus. Let's look at the numbers. The S&P's up 0.5% now, up 22. The Dow's up 0.75%, up 259. And the Nasdaq's up 0.1%, up 18. The 10-year is up 1/32. The yield 1.48%. West Texas Intermediate crude's up 0.2% at 75.15 a barrel, with COMEX gold up 0.25% at 17.6150 an ounce. The dollar yen 110.97, the euro $1.15.96, and the pound $1.35.66. Silver's up 1.6% at 22.53. That is a Bloomberg Business Flash. I'm Greg Jarrett. Now more Bloomberg Balance of Power right here on Bloomberg Radio.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. Federal workers will have to prove they're vaccinated against COVID by November 8th or face suspension and possible termination. That's according to new guidance by the Biden administration, which adds that all new hires must be fully vaccinated. The instructions mark the latest step in the president's push to increase vaccination rates nationwide. He announced earlier this month that all federal employees must get the shot. The U.S. government's challenge to a new Texas law banning abortion after about 6 weeks of pregnancy before most women know they're pregnant will have an impact far beyond reproductive rights. That's what a Justice Department lawyer told a judge today, saying the law encourages, quote, vigilante justice. The government is asking the court to temporarily put the ban on hold. It's the most restrictive abortion law in the United States. Supreme Court Justice Brett Kavanaugh has tested positive for COVID. The court says Justice Kavanaugh has no symptoms and has been fully vaccinated since January. His wife and daughters tested negative on Thursday. The court is scheduled to begin its 9-month term on Monday. All 9 justices are fully vaccinated. House Democrats went home last night without voting on that $550 billion infrastructure bill. Speaker Nancy Pelosi will try again today. The vote's being held up by a fight between moderate and progressive Democrats on the rest of the president's agenda. Progressives say they won't vote on infrastructure until Mr. Biden's full $3.5 trillion spending bill passes both houses of Congress. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. Economic numbers released this morning showed continuing signs of inflation, if anything, a bit higher than had been expected. To interpret these numbers for us, now we welcome Julia Coronado. She's the founder of Macro Policy Perspectives. Julia, thank you so much for being back with us. What did you make of it? Does it give a sense of alarm here about inflation at this point?
Not really, not yet. I mean, we're still dealing with an economy that's highly disrupted, but also pretty resilient. So consumer spending was pretty resilient, despite the added worries from the Delta variant. And the price pressures still reflect a pretty volatile mix of some things going up because of supply chain shortages, while other things like airfares and hotel fares felt the effects of the Delta variant. That's a good indication that inflation is still a mix of relative price movements. There's a lot of volatility in there, but we're not entering this sort of wage price spiral where everything is just going up and up and up. And I think the next phase of the recovery is going to be a test of this, really. So the stimulus, the power of the stimulus and the reopening of the economy really lifted all boats in the first half of the year. So profits rose, incomes rose, spending rose, and prices rose. Everything went up. But the next phase is going to be more of a mix, right? You don't have the cash infusion that you had in the first half of the year. Reopening is largely behind us, and now we're navigating sort of what does the outlook look like for the pandemic. And consumers are going to have to decide what they're willing to spend money on. Will vendors and retailers be able to pass on those prices in the same way? And so that's what we'll be looking for actually in coming months is how we know there's a lot of supply chain bottlenecks. We know that shipping costs are going way up ahead of the holiday season. how easily are those prices going to be passed on? How much will consumers shift away from that good spending that's been so dominant in the last year, really, and shift back to maybe some services? And a lot of that, as Chair Powell emphasized, sort of frustratingly so, depends on the pandemic and where we go from here.
So, Julia, I want to pick up specifically on one thing you said there, which is that it's different things driving the inflation at different reports. I mean, it was at one point used car prices, and now they aren't driving it the way they did before. At the same time, there seems to be always something that kicks in. I mean, even this week we had natural gas prices really spiking up, and we have supply chain issues that even Chair Powell admitted when he testified up on Capitol Hill this week are worse and lingering longer than he thought. At what point do we start to be concerned this is not just, as he would call it, transitory?
Well, so the way Chair Powell defined transitory was not so much in a period of time, but does it convert into an ongoing process of all prices going up, all wages going up? We're not seeing that yet. So we are still seeing relative prices moving around with what consumers want to buy and what's available to them. So that's not an ongoing inflation process. It's very volatile. It's been very high. I think one of the disappointing realizations of this recovery so far is how fragile supply chains are globally. But a lot of this is still tied to Delta. You know, the renewed supply chain bottlenecks and friction, some of that is tied directly to the surge in the Delta variant and factory shutdowns and port shutdowns in Asia. So, you know, that's the pandemic rearing its head again. And ultimately, we do believe that businesses will solve these problems. They have armies of supply chain people working on solving these problems. It's not going to happen overnight, but will that be converted into, you know, again, an ongoing process of all prices? I mean, if you look at, say, the period of the 70s, literally every single price was going up month after month. And we are not anywhere close to that right now. We still do see this mix of things. And so, you know, and various measures of expectations. And, you know, one of the questions around supply chain price pressures is, does it kill demand? You know, that's the typical thing we see with energy prices. When energy prices spike, it doesn't translate into higher wages for consumers. And so they end up spending more of their wallet on something else, or, you know, more on energy and less on other things. So, you know, that's the question for some of these other supply chain pressures. Do higher car prices mean that consumers spend less money on other things? Do we see, you know, we have seen some nice wage gains, but they've been very concentrated. And do they recur, et cetera? So it took many years for that kind of that ongoing price pressures to spread across the economy and into wages. So we're not, again, we're still in the middle of a very disrupted situation, a highly disrupted economy, a disrupted labor market, disrupted supply chains, a pandemic that won't end. Right. And so, you know, I think we just need to watch these as businesses solve these problems and consumers respond.
Julia, I just want to sneak one more in here quickly. One more uncertainty is what goes on up at Capitol Hill. How dependent is the economy, how dependent are markets right now on that Build Back Better plan?
I think it's pretty important. I think if we do see some version of the, you know, the larger bill and then the bipartisan bill get passed, I think the focus will turn to what's in there and what industries benefit and what does that mean for consumers over what horizon. And all of it is moving in sort of a supportive direction. If it doesn't pass, then we're looking at a pretty notable fiscal cliff for consumers with the expiration of the child tax credit at the end of the year. And just, you know, where do we find the drivers of growth around the world? China's slowing, the Delta variant, you know, the pandemic hasn't ended. And if fiscal support is turning into a headwind in the U.S., I think markets might be pretty sensitive to that.
Okay, Julia, really great to have you with us today. That's Julia Coronado. She is president of Macro Policy Perspectives. Coming up tonight at 6 p.m. Eastern Time, we're going to have Wall Street Week. We will include this week Peter Krause, Neil Ferguson, and our regular contributor, Larry Summers. This is Balance of Power on Bloomberg Television and on radio.
Burden LLC. If knowledge is power, The Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the terminal can take your workflow to the next level at Bloomberg.com/professional.
P Accountants and Advisors presents Tax Chat with Richard Goldstein, Senior Principal and Co-Leader of Burden State and Local Tax Practice.
The COVID-19 pandemic and the resulting state and local government restrictions have caused businesses to close their doors and many employees to work in locations that were not included in their company's original business footprints. The new normal of remote working has created a variety of state and local tax challenges, from tax nexus and multi-state income tax apportionment to income tax withholding and tax resident status. Businesses and individuals need to stay ahead of these issues to help reduce the impact they may have on their overall tax liability. If you're a high net worth individual or a business owner, let Burden help protect you, your family, and your business.
For more Tax Chat from Burden Accountants and Advisors, visit burdenllp.com. That's BERDONLLP.com. Burden Accountants and Advisors. We listen, we solve, we do.
To protect his home and family from disaster, Steve used courage, wisdom, and his camera phone.
That should do it.
Way to go, Steve! By simply taking digital pictures of his family's important documents, Steve can always have them stored safely online, no matter when disaster strikes. Learn other simple ways to protect your home and family before a natural disaster at ready.gov. That's ready.gov. A message from FEMA and the Ad Council.
Your business landscape is ever-changing.
There could be a lot more selling to come.
Ours is too.
Just getting some headlines I want to bring to our audience.
The president's saying that this is a pandemic of the unvaccinated.
We have something else in common.
Small caps continuing to feel the pressure.
We seek out the latest business news wherever we are.
A deep drop in Asian equities overnight.
Let's bring you some breaking news in terms of earnings.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's high time that we got to check on the markets, and to give us that, we're joined now by Kriti Gupta. So, Kriti, welcome. One of the things that your folks have quoted on to me is mega cap tech versus Russell 2000. There's sort of a trade-off going on.
Yeah, I mean, opposite ends of the trade, right? And on the forefront, you would see if small caps are outperforming mega cap tech for weeks. Well, in theory, that should be a reflation trade, right? And we should mean growth is coming back. It really helps the economy, but that's not really what's happening. It's more of a function of tech. And you'd say, well, why is tech selling off? And the going narrative has been that it's yields. That's really what's behind it. But David, it's not February anymore, which means that yield surge isn't necessarily driving tech as strongly as it did a couple of months ago. I mean, this is going to be really crucial when we're talking about just how the S&P 500, the NASDAQ has been hitting record after record. A lot of this is seasonality. September seasonality does actually matter.
Well, it was a rough September, let's be clear, for equities.
It was a rough September.
It was not pretty. And earlier this week, the big story was actually the 10-year yield. I mean, it's tamed down some now, but it really spiked up pretty fast.
Oh, absolutely. And, you see a direct correlation into the stock market from there. If you see yields lower, people immediately go into those yielding sectors in the stock market. And then tech doesn't end up driving the stock market. It ends up becoming the make or break case, where if you have real estate, consumer staples, utilities, those kind of yielding sectors do positively, and tech isn't on board, well, then the market tanks. But if tech is on board, then the market does better. But it really is a function of yields, but just not in a way that it directly affects tech. It affects stock market broadly.
Okay, let me put you on the spot. I mean, we had a rough September, as I said. You said that normally happens in a rough September. Now we're in the first day of October. I'm not sure I see a lot of direction. What do I get out of this?
Well, here's the takeaway on October. So you have this kind of tension in the market where September seasonality or the October effect, historically 1907, 1929, the bank runs used to happen in October. So there is a little bit of seasonality in October as well. So which one's worse? Well, we crunched the numbers over on the Markets Live team quickly, and I'll tell you that September tends to be a worse month historically, but October tends to follow the September move directionally. So if history stays the same, if the historical trend stays the same, then October should, in theory, be a down month too.
Okay, thank you so much to Kriti Gupta. There are no bad facts. Coming up, what Evergrande tells us about the broader Chinese economy with George Magnus of Oxford University China Center, and this is Bloomberg.
This is a Bloomberg Money Minute. If you don't have all the parts, you can't build the cars. And in 2021, those parts include computer chips. General Motors is blaming the global chip shortage, resulting in a shortage of finished vehicles, for its abysmal sales numbers over the summer. U.S. sales tumbled 33% in the July to September quarter from last year, as the company redirected its meager chip supply from sedans to keep propping up production of more popular and higher profit margin large trucks and SUVs. As legacy automakers struggle with supply of chips, Tesla seems to have procured enough to keep its production lines from being disrupted. Analysts predict the company will report record deliveries of its electric cars for the just-finished quarter. That would follow Tesla's previous record from this year's spring quarter. Promising trial results from Merck's experimental COVID treatment are sending Merck stock higher, and the Dow along with it. Right now, the Dow is gaining 0.75%. NASDAQ up 0.1%. S&P 500 rising 0.5%. I'm Andrew O'Day, Bloomberg Radio.
Jody Schwartz, noted tax attorney, tells us why she recommends Jewish Communal Fund.
I recommend the JCF to my clients, to my colleagues, to really anyone who asks a question about charitable giving, because it's convenient. It allows you the maximum tax deductions permitted by law, and it just makes your life easier, organized, and simple. Another aspect for clients and for other colleagues who don't want their identities to be known or don't want to talk about the property that they're giving away to charity, I found JCF's confidentiality, its aggregate reporting to be very attractive to people.
JCF can help you and your clients organize your charitable giving with a donor-advised fund. A fund can be established with a tax-deductible contribution of $5,000 or more. Contributions to JCF qualify for the highest tax deduction allowed by law. Visit jcfny.org or call 212-752-8277.
Hey guys, it's me, Isabella Gomez, filling in for Smokey Bear because he's got more to say than just...
Only you can prevent wildfires.
Like, if you're outside enjoying a barbecue, don't let a hamburger distract you from fire safety. Make sure you aren't dumping your hot coals or ashes onto the ground because that could start a wildfire. So take wildfire prevention seriously and let's save the world one day at a time. Juntos con Smokey Bear, podemos hacerlo. Go to smokeybear.com to learn more about wildfire prevention.
Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
When yesterday's business triumph can be undone in a matter of hours, it's not just how much news you can access.
The pipeline is returning to service.
It's how fast you can get it.
Maybe the times are changing a little bit.
Nathan Hager and Karen Moscow.
It needs aggressive support to speed the healing process.
Bloomberg Daybreak, weekday mornings at 5 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. 1 out of 4 companies has imposed a vaccine mandate for American workers, a sharp increase from last month. And another 13% plan to put a mandate in place. That's after President Biden's directive ordering large employers to require shots or weekly testing. The consulting firm Gartner compiled the figures after surveying about 400 companies. Charting the course of the COVID-19 pandemic during the coming months is likely to involve a more traditional winter nuisance, the flu. As countries lift restrictions, travel resumes, and colder temperatures set in. Influenza will probably start circulating as well. Efforts are underway to lessen the potential strain on health systems dealing with both illnesses. A new UK study found it's safe for people to get COVID and flu shots at the same time. U.S. Secretary of State Antony Blinken will visit France next week. The State Department says he will try to ease tensions and prevent any lasting damage caused by the United States' exclusion of the country from the new Indo-Pacific Security Initiative. The administration has been scrambling to mend fences with France and the European Union since the September 15th announcement of the Australia-US-UK agreement that canceled a multi-billion-dollar Australian-France submarine deal. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. Well, last week, markets were hit hard by the news of that crisis over Chinese property giant Evergrande. But this week, they seem to have moved on. But are they too quick to forget? We welcome now China expert George Magnus of the Oxford University China Center. And he is the author, of course, of Red Flags, Why Xi's China is in Jeopardy. George, great to have you back with us. So I guess the real question is, were the markets too quick to forget? Are there larger implications of Evergrande that go beyond whether any individual bond payment comes through?
If we look at the company, I think the markets are probably right. I say probably because we never know for sure. Probably right to assume that the contagion from Evergrande can be maintained and kind of ring-fenced, as it were, within the property sector in China, and is not going to spill over into a broader financial contagion in China's financial markets or anybody else's. In other words, no Lehman moment, no Minsky moment, nothing like that, because basically the Chinese government controls really the banks and all of the principal actors amongst whom it's got to basically shift around Evergrande's assets and, more importantly, its liabilities. It can do that. So in that sense, I think the markets are probably right to be relaxed about this in terms of contagion. But obviously, there's a much bigger story afoot that goes beyond Evergrande, which is China's real estate sector.
Well, exactly, George. I was going to say, OK, we can limit it to the real estate sector. That sounds kind of encouraging, except when you look at how big that real estate sector is, how much of a driver of growth it's been, of employment, of what percentage of GDP is in China, it's pretty startling.
Yeah, so it was valued in 2019, 2020 at about $52 trillion. That's 4 times GDP today and twice as big as America's real estate market. The last time anybody had a real estate market that was twice as big as America was Japan in 1989. We could go there too if you want, but that's just a kind of casual kind of warning, really. But I mean, I think the problem is, it's a big market. It's an elephant in the economy. It's 29% of GDP, according to a paper that was written by Ken Rogoff quite recently. If you take into account not just construction, but housing services like managing property, buying, selling, and renting, and all of the industries associated with housing construction. So if something happens to construction activity, which it is, I mean, the volumes of building and sales now are down pretty heavily year over year. And if something were to happen to prices, more to the point, because nothing's really happened to Chinese housing prices except going up for the last 20 years, then I think this is a bear market that could go on for a decade, maybe more.
So, George, I mean, we don't want to see ill happen to any investors. We don't want to see people out of work. We don't want to see people's housing prices go down. But let's be frank, for the rest of the world, a lot of concern is, what does it mean about the Chinese economic growth engine? Can they keep driving growth if so much of it came off the property market and still constrain the property market if, in fact, they conclude they have something of a bubble?
Yeah. When I was at the coalface at UBS before I went to Oxford, we used to say that China's property market was the most important sector in the world, and it still is, actually. So in those days, of course, this was because of the, protracted exuberance on the upside. Now its importance lies in the fact that, it's basically facing huge structural headwinds going into the 2020s and 2030s. And so I think what this is going to do is, if it can be reasonably orderly, we don't know that things won't get out of control at some point, but if it can remain orderly, then I think, we're going to see a marked deceleration in China's economic growth. We would have seen it anyway, I think, but the property, the bringing forward of the property down cycle basically is going to exacerbate this. So we might get a kind of a Chinese recession with Chinese characteristics, but very, very low growth is in prospect, I think, in the next few years.
So, George, you wrote that wonderful book, Red Flags, which really focused on President Xi. Is President Xi in a position to take a recession? As I recall, he's up for renewal, isn't he?
That's the 64 trillion yuan question. Obviously, China's eruption in the global economy and its own self-confidence, to the extent it has it, is basically rooted in China's economic heft and the fact that nothing goes wrong. If China's economy is going to face much more challenging headwinds in the next few years, and if things did go wrong, let's say in the housing market, or we went through a kind of a non-COVID slump in economic growth, then lots of things change in terms of the geopolitical narrative, and Xi Jinping's own position in China may be, I say maybe because this is kind of a very, very speculative area in particular, but it may be at risk if there are other senior party leaders or factions that, kind of feel that maybe China's going the wrong way under this particular leader. He will be nominated for a third term next November 2022 at the 20th Party Congress. But just watch this space, I think. I mean, we always want closure very quickly. This may take kind of a few years to kind of pan out, but the economy, I think, will be a very, very important determinant of what happens in China politically.
And finally, George, I mean, we care about U.S.-China relations, those of us who live in the United States, but beyond that, it is the number one and the number two economy in the world, and how they get along or don't get along can affect a lot of the rest of the world. Are we better off, the United States, in dealing with China, with a secure and happy President Xi, or one who's feeling pressed?
Good question. I think that, we have to strike a balance, don't we, between, just looking at our own options in liberal-leaning democracies, a balance between, not being cowed into submission about China's inevitable rise, but also not being complacent because it's a serious player. We can't really do anything but guess about what's going on inside China. And, the risk of a kind of a more unstable China or a politically volatile China, in case they're feeling very edgy about what's going on in the economy, because the storms are kind of brewing, that makes things a lot tougher for policymakers, I think.
George, it is always wonderful to have you on the subject of China. He's George Magnus of Oxford University's China Center and the author, once again, of Red Flags. Coming up, we're going to go back up to Capitol Hill for a talk with Republican Congressman from Ohio, Warren Davidson. And we are heading to Washington ourselves next week. I'll be anchoring live from there next Tuesday to Thursday. Highlights include Senator Dick Durbin of Illinois, Dr. Anthony Fauci, and Senior Advisor to Vice President Simone Sanders. This is Balance of Power on Bloomberg Television and Radio.
Carol Massar and Bloomberg.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to the real-time financial news, data, and analytics that can take your workflow to the next level. Power up at Bloomberg.com/professional.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Stocks continue to climb as prospects for an economic recovery outweigh concern over faster than estimated inflation at a time when the Federal Reserve is getting ready to wind down stimulus. Companies that stand to benefit the most from a pickup in activity, like energy, financial, and industrial shares, outperformed technology firms. But Sarah Hunt, portfolio manager, Alpine Woods Capital Investors, tells Bloomberg she remains positive on tech.
If you look at some of the larger technology stocks that were hurt a little bit in the original reopening trade, I think that there's still room for that group to do fairly well, and that is a group that has more pricing power than some of the other areas. We also look at things like, United Pacific and Dollar General, things on the economy that are that the softer reopening that we got are going to benefit through the next year as well.
The S&P is still headed toward its biggest weekly slide since January. Vaccine makers dragged down the healthcare sector after Merck and company's experimental pill slashed the risk of becoming seriously ill or dying from COVID-19 in a study. The S&P 500 is up 0.5%, up 23. The Dow's up 0.9%, up 300. The Nasdaq is up, about 0.1%, up 10. The 10-year right now is little changed with a yield of 1.48%. West Texas Intermediate crude oil is up 0.6% at $75.46 a barrel. COMEX gold's up 0.25% at $17.6140 an ounce. Let's take a look at the dollar yen is at 1.11 now. The euro's $1.1598. The British pound $1.3569. Silver is currently priced up 1.75% at $22.55 per ounce. That is a Bloomberg Business Flash. I'm Greg Jarrett. Now more Bloomberg Balance of Power with David Weston right here on Bloomberg Radio.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Yesterday, we heard again from Secretary Yellen and Chair Powell testifying before the House Financial Services Committee. Welcome now one of those who was asking the questions. He is Republican Congressman Warren Davidson of Ohio. So, Congressman, thank you so much for being back with us. First of all, just tell me, having sat there, asked those questions, gotten some answers, what'd you learn?
I thought it was a great hearing. I mean, we were able to talk to Chairman Powell about really from the pre-CARES Act, the very first day when the government started shutting down, how important 13.3 was, to the stability. I mean, there was literally no buy side. People forget that at this point. There was no buy side, whether you're talking municipal bonds. Oil didn't just go to zero, went to negative. So it's kind of a refresher on how important the Fed's emergency powers were there and kind of the limits of it. And then when you talk on the most relevant thing right now, the debt ceiling kept coming up as something that has to find a way to get done. But the point I made with Chairman Powell was, whether it was in the private sector when he was a CFO or, now as a, top regulator for banks, when you extend credit, there's underwriting involved. And right now, there's not a plan to repay this debt. So it seems like if you want to raise the debt ceiling, there would be some level of underwriting. So how are you going to pay for it?
At the same time, you heard Secretary Yellen say she doesn't think the debt ceiling makes much sense at all. And her point, as I understood it, was, listen, you're Congress. You're the one who's voting to spend money. If you vote to spend the money, what sense does it make to say, we've voted to spend the money, but we won't let you borrow in order to spend it?
Well, I think that was a little disingenuous by the Secretary. I mean, frankly, it used to be that the level of taxes were the check on the government, right? So if the people were only willing to be taxed at a certain level, the government was constrained to the level of taxation. Then they blew through that and said, well, we're only going to be constrained by the ability to borrow. And now we're not even constrained by the ability to borrow. Look at the Fed's balance sheet. They've got over $8 trillion on their books as the lender of last resort. So in a way, kind of already monetized 8/29 of the debt. We have 29 trillion in debt. The only way for the government to continue to operate isn't to pay for it with current cash flow coming into the Treasury. They have to borrow to even operate the government. So there should be a conversation. And frankly, the executive branch by itself doesn't have the authority to just borrow. That's Congress's job.
Congressman, as I understand the argument, in part from the Republicans, from your side of the aisle, it's that, wait a second, you can't divorce the debt ceiling from what you want to spend with all this money on the Build Back Better plan. Yesterday, we heard a key Democratic senator, that is Joe Manchin of West Virginia, say not $3.5 trillion, $1.5 trillion. By the way, that takes us inside of what we would pay for with increased taxes. Does that make you feel better about what they're talking about?
I was very excited by Joe Manchin's logic on that, his previous Wall Street Journal op-ed. And frankly, when that letter came out between him and Schumer, I was also encouraged that he was pushing to end the Fed's, he referred to it as quantitative easing, but their asset purchases, $120 billion a month. So, a lot of people see that for what it is. It's an economic distortion. It's creating artificial demand. And look, in 13.3 authority, that was vital. There had to be a buy side. Right now, it's just inflating markets.
Let's talk about something that you're a real expert on up there on Capitol Hill, and that is digital currencies, whether it's cryptocurrencies or a central bank digital currency. One of the things we heard yesterday was a flat-out question to Chair Powell, are you going to ban digital currencies? And as I understand the chairman, he said, no, we're not. Did that give you some cause for concern, or were you pleased with that answer?
Well, it was a good question by my colleague Ted Budd from North Carolina. And it was relevant because in the March hearing, last time Chairman testified before our committee, he basically implied that if we had a central bank digital currency, we wouldn't even need stable coins, and it might diminish the need for crypto. So that's really the source of the question. But of course, the Federal Reserve isn't the body that has clear jurisdiction over stable coins. That would really be, the SEC potentially. And I think right now one of the concerns is at Treasury, not so much at the Fed, that they would treat all stable coins as securities. And of course, not all stable coins are. Some may be. I think there's a lot of speculation that Tether is effectively a money market fund at this point. So in the context, it really brings together what's going on in crypto and kind of the linkage to what we're all looking forward to late October, maybe November, when the Fed comes out with their white paper.
Yeah, I'm sure you'll be watching that very carefully about central bank digital currencies. But on the sort of, if I can say it, nibbling around the edges of regulation, we have the SEC making some noises. Actually, Chair Powell specifically made the point about money markets and how some of these things look like that. Do you agree that they should be doing things, for example, on stablecoin, like making sure that, in fact, that there are reserves backing them up if they say that they're reserved?
Look, I think Tether is a time bomb, personally. I think there should be a lot of regulatory oversight on Tether. And there should be some level of transparency as what is the quality of the commercial paper that's there. They've disclosed it's there. I was encouraged to hear them say they didn't have Evergrande, for example. But they do have Chinese commercial paper. What's the quality of that? And people can't really assess it. I am concerned that the lack of action by Congress is leaving this just ripe for regulation by enforcement. And that scares off capital. And I think a lot of capital is fleeing the United States of America for, calmer pastures where they have more regulatory clarity.
And finally, Congressman, are you concerned at all, as some people say they are, that China might get ahead of us when it comes to central bank digital currency? Now, I'm not talking about cryptocurrency, but central bank digital currency. They clearly are really going for it hard. They are banning transactions in cryptocurrency. Is it possible they could get ahead of us, and would there be consequences potentially for the United States?
Well, look, the Chinese version, there are big consequences because China's version of a central bank digital currency is really the creepiest surveillance tool developed. I mean, it brings together a central look into every single transaction. Who are the parties on both sides of the transactions? It's not a third-party doctrine where you have bank reporting requirements like you do in America. Literally, the Chinese Communist Party would see into that, and they're linking it to a social credit score that ties geolocation data, every piece of data they can collect on a person, which really says, are you a good citizen in the eyes of the Chinese Communist Party? I certainly hope that the United States has no interest in developing anything like that. What we should be using is true blockchain, distributed ledger technology, like Bitcoin has, where you have trust established in a different way, where you facilitate permissionless transactions in keeping with the civil liberties of our own country. It would be a shame to see us chase after an authoritarian regime like China.
Does that mean, to jump ahead a little bit here, as we look at central bank digital currency here, and I'm going to get over my skis here, that means we don't want an account-based system, we want basically a token-based, so that you can have transactions without the Federal Reserve knowing what the transaction is?
That's absolutely the only kind I would support. And one of the alarming things is the Bank of International Settlement in Switzerland, which is really the central banker to the central banks. They've been doing a lot of work in this space and have some white papers available for public right now. And it seems like they're laying the framework for this centralized system that is more compatible with what China wants to. And it really is, where is the future of money? Where is the future of central banking going? And I think America has to get moving so that we develop a system that enhances our culture and our values, not China's.
Including one of privacy, I think you would say. Thank you so much.
Absolutely.
Really great to have you with us again. That's Congressman Warren Davidson, Republican of Ohio. Coming up, bumping up against that debt ceiling, we hear from former Treasury Secretary Larry Summers about how dangerous a game they're playing on Capitol Hill. This is Balance of Power on Bloomberg Television and on radio.
With three bright minds thinking of questions.
How far apart are the two Americas right now?
Someone's bound to ask the one you most want answered.
What defines that as the year goes on?
Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
How do you explain the fact that you have not seen a cheer from equity traders?
Bloomberg Surveillance.
Will that occur within market stability?
Weekday mornings at 7 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
I learned patience from my adoptive dad. All he had to say was,
"Hey, you got this. Just breathe." Hey, we're pretty good.
Yeah.
Might have to start a band.
I got it.
Learn about adopting a teen from foster care. You can't imagine the reward. Visit adoptuskids.org to find out more. This message is brought to you by Adopt US Kids, the U.S. Department of Health and Human Services, and the Ad Council.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, shares how we help you consider everything.
In today's ever-evolving environment, the team at Pershing's Prime Services wants to know, what are you focused on now? Are you confident in the stability of your counterparty? Do you feel they can help you grow your business? When it comes to fundraising, do you have access to the mindset of the advisor or have what you need to navigate the ODD process? Exceptional service for our clients is at the core of what we do. Our award-winning team is just one of the benefits of working with BNY Mellon. Whether it's customized financing or securities lending solutions, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your demands, so you can focus on growing your business and producing results for your clients.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC, member FINRA, NYSE, SIPC.
When will you be able to go to a meeting where nobody smells like hand sanitizer? Who knows? But we can give you the latest business and financial news, fragrance-free.
Let's tease out some of what you just said.
Are there tools in the toolbox for the Fed?
Does that point to the need for continued monetary support?
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
You do realize the mark that this is having on a younger generation.
Bloomberg, the world is listening.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Much of the Yellen-Powell testimony on Capitol Hill this week was given over to Democrats and Republicans sniping at one another over the debt ceiling and who was responsible for bumping up against it. We talked with former Treasury Secretary Larry Summers earlier today, and he was explicit about how senseless and dangerous this standoff is.
Games of chicken are really dangerous. People who play games of chicken never plan to crash their cars and die, but occasionally they do. And that's the risk in this thing. And I hope people will find a way to recognize reality. There is no magic solution that is going to get us through this. Some 50 people in the Senate and 218 people in the House are going to have to take a vote that they would rather not take, but that there's absolutely no choice for our country to take. And I just hope we'll find a formula where that's done. You're already seeing the effect a bit in the Treasury markets on securities that are coming due soon. The longer this happens, the longer we look like a country that's having difficulty governing itself. And that's an important issue for our international perception. Most important op-ed of the year was written by Robert Kagan in the Washington Post this week, and it discusses how there's a real danger to American democracy from authoritarianism coming out of President Trump and many of his allies. And there is no responsibility much more important than whether we have this size tax bill or that size tax bill, this inflation rate or that inflation rate, is that responsible officials find ways to marginalize that, I never thought I'd say it in the United States, authoritarian threat.
Hear more of that interview with former Treasury Secretary Larry Summers coming up on Wall Street Week tonight at 6 p.m. Eastern Time. Among other things, Larry addresses very directly Joe Manchin's proposal for the $1.5 trillion Build Back Better, and also talks about the corporate tax rate and how he can't understand why we can't raise it up to as high as 25. Coming up here, we're going to have a second hour Balance of Power on Bloomberg Radio, and we're going to talk with specifically Max Baucus, former ambassador to China, and also former senator. He was head of the Finance Committee, which was responsible for writing tax laws. We're going to talk to him about what's going on Capitol Hill right now and whether it all makes sense. That's coming up next on Bloomberg Radio. This is Balance of Power, and right now we're on Bloomberg Television and Radio.
This is a Bloomberg.
The world's financial decision makers connect on the Bloomberg terminal, sharing ideas, negotiating trades, and forming an influential network that helps power global markets. Isn't it time you join them? Bloomberg.com/professional.
Pursuits, look, and luxury. Your jet's out of commission. Your Ferrari has a flat. And now you're stressed out about when the Biden tax plan might hit you. While it sounds like rich people problems, and that's what it is, it's also proving particularly challenging for high net worth financial advisors, thanks to all the details around the proposed tax package still up in the air. We have to calm them down, said Joan Crane, global wealth strategist at BNY Mellon Wealth Management. We don't know what's going to happen. In the meantime, you can play a game of Spot That Rolls. In 9 years, Rolls-Royce is going all electric. First up, the Spectre sedan, which is scheduled to arrive the end of 2023. It's now undergoing 2.5 million kilometers of testing and offering a veritable Easter egg hunt for lovers of Rolls-Royces, as they will be tested in plain sight on public roads. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
You know the expression, hit the ground running. We think it's a better idea to hit the ground listening. Karen Moscow.
The pandemic is having a major impact on the labor market.
Nathan Hager.
President Biden is setting a new goal.
Bloomberg Daybreak.
A landmark trial kicked off this week.
Weekday mornings at 5 Eastern.
We really haven't seen that kind of move happen.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Remember the last time your family visited the forest? It's a place of wonder and imagination for the whole family, where stories come to life. And it's closer than you think. Ready to plan your next visit? Make the forest part of your story today at a local park near you, or find one at discovertheforest.org. Brought to you by the United States Forest Service and the Ad Council.
I was in the middle of the Atlantic Ocean when it happened. There was a sudden jolt and our submarine crashed on the seafloor. We were in total darkness.
That's Dr. Dejana Figueroa, a marine biologist and STEM teacher, talking about a deep sea dive she'll never forget.
It's funny, when I was a kid, I was afraid of the ocean, and there I was, 2 miles below the surface. But as a scientist, you prepare for that. Using our training and a little creativity, we fixed the sub and finished our experiments. The dive was just too important. Every dive gives us glimpses at things few people ever get to see. Glowing creatures, fiery undersea volcanoes. When we got back to the surface, I kissed the ground and called my mom, of course. But you know what? I wouldn't trade that dive for anything.
Dr. Figueroa uses her passion for STEM to discover new things and make the world a better place. She can STEM, so can you. Check out She Can STEM for more stories and inspiration. A message from the Ad Council.
Broadcasting 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ all advancing right now. S&P 500 index trading close to session highs after posting its worst month since the early days of the pandemic. Investors are weighing a pickup in the pace of inflation and the Fed's tapering plans. Right now, the S&P up 22, a gain of 0.5%. The Dow up 269, making up some of yesterday's decline of 0.8%, while NASDAQ higher by 3 right now. That is a gain of less than 0.1%. NASDAQ 100 index full of tech stocks down 0.1%. Russell 2000 up 1%. Dow Transport's up by 1.2%. Bitcoin, major story today, surging 9.4%. Bitcoin now with a 47,000 handle, 47,505 on Bitcoin. Gold up 0.1%, 17.59 the ounce. West Texas Intermediate crude up 0.5%, 75.41 a barrel. And the 10-year up 2.30 seconds. 10-year yield right now 1.48%. Now a mixed day. NASDAQ just turning lower, down by 2 points, down less than 0.1%. As for the economic backdrop, consumer spending advanced in September, topping Wall Street forecasts. Inflation data tied to the report posted the largest annual increase since 1991. The government numbers also show household income growth moderated. Well, as for the numbers themselves and reacting to those numbers, Julia Coronado is president and founder of Macro Policy Perspectives, and she was our guest right here on Bloomberg.
We're still dealing with an economy that's highly